Good morning. March 6th. We're going to be streaming stocks, options, futures. Looking at some technical analysis. Thanks for joining. Morning, Bungie. Get a little setup here. Hey, but I wasn't late, I don't think. A little bit. You guys have a good weekend? There we go. Morning access. Okay, I'm gonna share the stream on Twitter. I appreciate you guys doing it the same. That is awesome. Monday or text updates as of the time of this post. AMC 8 BBY Mullen. BBBY still on reg show. Still happening. Yeah, I think it could keep pumping until PAL tomorrow. Morning, Tao. So if you look at like something like this, our chart actually looks very similar to here. At like, what is that? Almost a month of just kind of declining price, and then once we did hit a bottom, we even got this engulfing candle, same deal, and then just a 4-day pump before dump. So I think we're kind of in that even. Declining price for almost a month, big engulfing candle. Day 2, I think we'll probably have another day of it. And then PALs tomorrow, and that could be this gap down and start to sell off. So I think we're kind of repeating this sort of area, because this was probably around data as well. Someone said something that was totally different than what the consensus was, like Bostic, and it just bear market rallied, and then PAL came out and squashed it with something. That's what I'm thinking so far, at least. So 408, 34. That's probably where I'll be looking for a short, which would make a nice little head and shoulders here too. And if that hits today, then yeah, maybe I'll enter there. Might not be till tomorrow, before PAL, after PAL. Get the morning bugs out of my throat. Blech. All the protein I swallow overnight. Kala is up 26%. Talked about this one the last few days last week. It was looking pretty good. And then there were 2 or 3 that I was like, if these close high on a Friday, that's good news for a Monday or Tuesday rally. And looks like this one didn't fail to disappoint. Had that pump on Friday, and if it's that strong on a Friday, oftentimes you get this on a Monday. Something squeezy and speculative like this. Let's see, GNS, same deal. Pumped on Friday. This was on AI news, I guess, which is kind of, that's true. That's kind of a letdown. I have to read the news, but it sounds like just hearing that it's on something about AI makes me think it's just a bandwagon. But I'm not sure yet. Might be legitimate type AI stuff. GTII up yesterday. Yeah, nat gas had a big sell-off. So down 12.5%. This is, I feel like, somewhat normal. I don't think there's any necessarily news. Just been on a tear. These things come up a lot. So it's profit taking. We're going to be, you know, finding support and seeing if we can continue the rally. Yeah, so I still have a limit order to buy more here, like this range, and looks like we'll open up somewhere around here, so that might get filled. Yeah, I still think this is a good price down here in this A range on UNG at least, but maybe I'm wrong. Maybe I should have taken profits here. It's tough with it. It's like you don't know where it's gonna just end. It's not like stocks that just go up, you know, if it's a stock that everyone wants, or it just goes down. This is like, trades a little different. So yeah, you will get these huge gaps sometimes, and big gaps up also. BBY had some pretty good pre-market action. BlackBerry looks pretty nice as well. BBY's up 3%. So I was up, I don't know, 6 I think earlier. Got buying power back. Probably do some cash trade puts on BBBY, and maybe some covered calls too. Bought a bunch of leaps. Nice. $1.50 for 2024. Problem is they're still 5 yen. These are still super high, but it could increase. Got a nice low strike at least. So you know, this gets, we get up to $3, $4, $5 in the money. This will be nice. $2. I don't know. I'm sure someone has some of them. Some in this very chat, I reckon. These drawings, make some new ones on the SPY. If I do trade any futures on this S&P, it'll probably be just the micros. Market high, low. And we'll give like this level a go. We'll do one to the upside. There, we'll do that one. And then to the upside, we've got some room to rally. That to there. Okay. Yeah. Oh yeah, the gamma ramp's still there on BBY. It's crazy. GNS up 9% pre-market. Yeah, see, this one held up well going into Friday too. This is another one that holds up good into Friday. Probably going to be good. Good for a gap up on Monday. Lasers up 7%. Julian doing good. Hope you had a good weekend. Favors mirror BBY punishment. Punishment to the shorts. I don't know if we'll stay below $1.50 this week, or by close by Friday. I'm not too certain of that. I think we might be crossing that $1.50 threshold, and $2 might be the battle this week. By end of week, might be just under 2. Gas, getting some volume. Might pick up another contract if it looks like this is starting to turn around. Momentum down 12.5%. Kind of hitting the resistances from back here. Oh, it's actually passed through there, so yeah, we'll see. I think it could turn around anywhere here, but might take some days of consolidating. Pretty big gap down. I think I'm still up on my contracts. Yep, still up, but they are down 4,800 from Sunday. Okay, got about a minute to go. GME rip 20% down, 0.20. Yeah, they make you pay for live option quotes. I think it's like free if your account's big enough. I can't remember. We've got multiple brokerages, so I'm not really concerned with it, I guess. Having to get it on there. How much did we got wrecked last week? Why'd you get wrecked? It basically traded flat or went up a little bit. Okay, 1 minute, half a minute. Let's look at when Powell is. What's going on this week? Because Powell's tomorrow. I'm trying to think what time. 10 a.m. So he's testifying to Senate at 10 a.m. Consumer. So that's it. It's tomorrow morning at 10 a.m. So. And then again on Wednesday, testifies to House. So testifies to Senate tomorrow at 10. Testifies to House on Wednesday at 10. And we have job openings also on Wednesday. Powell is the top of my list so far with that 27%. I think I want to start getting some GME calls, some more of them, sometime today for earnings, probably end of month. Maybe sell them before earnings if we get a 20 or 40% move. Sitting on the bridge. Buy's coming down here a little bit from open. BBBY. Came down a bit. GTII, I don't. This thing's still closed. Everything's getting a real slow start here. Real laggy, real slow. Swim. Thanks for your likes, guys. I appreciate it. Got 8 of them on this beautiful Monday morning. Hope you guys had a good weekend. So net gas looks like it kind of flattening out here at the open. I'm gonna look for, might do some cover calls on some of my shares in BBY. So looking for a pump for that, and then I'm gonna do some more cash good puts. So looking for a dip for that. So try and time it a bit. Spire that just wicked down. Back up to open. AI, yeah, it's I don't know, it's good. And that little earnings rally. I mean, as long as the AI pump is going on, it's probably going to hold up pretty well. You know, the initial pump of AI started, what, like a month ago? Yeah, just about a month ago. So these things can last for a couple months. Not to say it's not going somewhere, but the initial over exuberance of it, where people just mention AI and their stock goes crazy. SPY is ripping there. Almost back up to pre-market high. GME getting a candle with that. Wow, you see that GME candle? Whoop. So let's see, I've got 18 and a half calls in GME. I'll probably get like 19 or 19 and a half. Just kind of move up the chain as these get in the money. But wait for, whoa, SPY new high there, yep. Probably keep pumping till Powell tomorrow at least. And we'll have some volatility. BBY just still pretty flat kind of at an open. Oh, there's a red. SPY wicking out of that resistance. BBY not red yet, but yeah, just flirting around that $1.50. See if this level from pre-market holds or yesterday's. I'd say 147, 147 from Friday. See if that's still support. Friday we did kind of, we got bearish on the MACD on the hourly and right into the 9. Little bear flag. But on the longer term, it still looks good. We still have this inverted head and shoulders here. I'd like to see kind of 147 hold. The lowest 143. Look probably at the 2 strike cover calls on these shares. Well, really just getting back into my spreads on weeklies. Sell 6 of them maybe. I have an order for some short calls on BY Weekly at two strike for Friday. GNS up 9%. Finger motion up 11. MSGM up 13. GME's holding up well. Let's see, should I do some cover calls on here? Quarter hops. Okay, BBY now down 1.25. Getting to that 147 level. If that holds. You should be able to trade in pre-market. Even with this red on BBY, my cash secured puts are up my $1.50. Isn't that crazy? And they're in the money. I'll be heading to 140. I mean, I know you like to inflict pain on yourself, but I don't know. I think we'll find support before 140. You're back in now? Yeah, Turkey did look good. It's like some profit taken on it now. Head to 127. 147 still holding. Say, Unky? Unicycle Therapeutics? Oh no, Unicycle? What the heck does that say? Unicycle biotech company. I wish it was Unicycle Therapeutics. That's, I mean, I'd buy that. I believe in the Unicycle Therapeutics. 147 didn't hold. We got a low here, 145. After 145, I'd say probably 143. And paying because you bought and you immediately regretted it because it started coming down. Unless you sold back out already to buy again. Just yeah, I guess you don't understand it. There. I mean, it's a stock. Thirka. I don't know what this catalyst was. Why did it dump? Have to have long-term conviction to be buying a dip on something like that. Turka's still selling off. It's kind of holding up a little bit. SPY above VWAP, but not breaking that resistance yet. GME, solid morning, up 1.8. Waiting for a little cool off for some calls, cool off calls. But it's looking nice. Looks like that bottom was a couple days ago. Not sure how much of a rip we're gonna get though. That's the only thing. It seems like they fixed it. Oh, you're talking about the order book? Yeah, I guess I just more look at support and resistances since order book can have a lot of spoof shares, and I don't see anything till $1.02. There's nothing on the bid till $1.02, and that's 600,000 order. GNS to 10. I want to see the new. I heard it was AI news that pumped it the other day. Technically, it was just off of this resistance. So, it is up 14 though. I mean, it held strong. The theory stood. If it rallies strong in Friday and holds up and doesn't sell off into Friday, you're looking good for the next week. So it's just at the Friday highs though at this point, I guess. Fox D is up a little bit. Buys holding that up here. Is this thing so overbought already though? Doesn't care. Nope, there it goes. GME 2%. Need to get a kind of a pullback here and I'll probably grab some contracts. BBBY hit 145. Looks like it's maybe gonna hold that as a support. SPY new high on the day. 406.48 I guess is the next kind of level, but it's kind of open above here really. Got this gap fill. Yeah, I guess that resistance is kind of that gap fill 406 area, 406.39 or 40. So yeah, I'll let the rally go. And I'll just try and find a short, which I think I'm gonna put in. I think around that level I'd like to grab a short. Taking profits on nat gas would have, of course, been smart hindsight, and I could have more margin to trade ES, but I picked nat gas. All right, BBY is back at 145. Let's see if it flushes through here. Put a line at 143. SPY's kind of wicking down here. I mean, if it held this level, the head and shoulders would just look nicer, but not to say it's not still in play if we hit 143. $40 pre-earnings. Woo! Nice! Good fight in 1940. Wow, look at this thing. Yeah, it's pumping. 3.5% on GME. Good volume too. So seems like the calls is a good play. Just don't want to get them right out of open, but probably would have had the best price if I did. But that is an exception and just more risky in general. What was all that fuss about a bullish one? But it's still there. That's why I bought, man. It's still engulfing. They can't get rid of it. So doesn't mean you won't consolidate some first, but it is signs of a trend reversal. And I think we still have that. So we still have a inverted head and shoulders as well. SPY new high, ripping. GME has earnings sometime this month. They haven't announced yet, but probably in the next 2 weeks. New high on SPY there. Unky halted up. Unky. Unicycle Therapeutics. Yep. Biotechs. Fidelity thinks GNS 16%, MSGM 14%. Thanks guys for likes. We're at 10 of them this morning. Not bad for an early Monday morning. Thank you. Buys coming down here. Stay up a bit of an engulfing candle to the downside. Just back to VWAP. I think I'll do some cash secured puts here. Let's see, I'll do them on here. So I'm gonna sell, just do 10 of them. Sell 10. Yeah, I think we might hold this 145 level. Even come down to 143. Oh, it filled. Nice. So put that in Discord. Hold the pre-market. GME, whoa, big flush down with the SPY. I could get some more on. Oh, there's a flush on BBY. Okay, broke the 145 at 144. Could have been a little more patient on my cash secured puts. So wick down to 143. Now we're getting some bid supports popping up. 135 is a little bit, 98,000. 130 has 160. 131 is 161 or 100. Yeah, I don't think I got filled on my covered calls. Oh well. Wait for the afternoon pump, maybe. Brain chips up 13%. Remember brain chip? The GME lookalike. Okay, I might get some GME calls here. IV's up to 90% now. I guess end of month. Shorter data are nice. Nice low IV. My cash secured puts that I opened up yesterday or last week are still up on BBBY. That's funny. And they're in the money. The $1.50 ones. Yeah, got good fills on those. Don't know how. Coming down here a bit. Oh, never mind. Flip back to green. If GME could just even get a earnings pump like AMC did, that wouldn't be too bad. BBBY at 143.5, down 3.5%. Sub up, like up, comment down, happy money sticks around. Hey Seymour. Well, if you like BBY at 1.6, definitely like it at 1.43. Like it at 3. If you like it at 3, then you should like it a lot more at 143. Oh, my GME calls got filled. On that red candle, there we go. I'll take it. It's early, but I don't know if we're gonna have much time before we start pumping. Threw that into Discordian. Well, if stocks just went up, when would you buy it? Buy it at a high, hoping it goes higher. Buys bouncing up here, pretty aggressive. BBBY holding that 143 so far. Venus is moving nicely. Yep. Venus broke out of the high from Friday. That is good news for the longs. We got 48, 40, I'd say, is the next level up on there. Looks like it's going to hit it very shortly. Mullins up 5%. Genius Group shorts after filing a lawsuit to prevent share dilution. What? They filed. What in the world? GNS was going to offer an NFT, right? A coupon NFT. Now it's currently fighting a financing agreement and has even launched a lawsuit in pursuit of that. Genius Group shareholders are much happier with this move, sending shares up over 58% in Friday's trading. Genius Group launched a lawsuit to take on Ariton Capital, which was about to do something very unusual under the terms of its financing agreement. Ariton claims per the agreement, you can convert an $18 million loan to Genius Group into 49 million ordinary shares of stock. At the time, such a move would give Ariton 200 million worth of stock. Currently, Genius Group has a market cap of 48 million. Genius Group's fight against such behavior will likely help it with shareholders, but it's got more than that on tap. Recently, the firm announced it was starting the California Business School, which will house Genius Group's MBA program and offer counsel work for a range of best-selling authors. So someone was trying to dilute. I don't even understand that. They were trying to dilute with the NFT. They're trying to convert a loan into shares of the stock. And now they're in a lawsuit with them. That's crazy. I think that's what the move on GNS was. Not necessarily I didn't see anything about AI. Yeah, GME is now just another stock to me, unless something crazy happens around earnings as well. It's kind of been proving itself that it's been fixed. So party's over. Party's over, Wayne. 143 has held so far on BBBY. Starting to get a little bid support there too. 79,000, 80,000. 140 has 137,000. 135 is 102,000. I'm gonna sell some more cash secured puts. I'll wait a bit. I'll wait. Not really down on those yet. It's basically the same price I sold them for. SPY's moving up here a bit. SGM up 18%. This one looks like it's changed the trend. Nice. Ala holding up pretty good, 15%. Your motion 12%. Snaps up 10 and rallying. Move on Snap today. Pretty bullish. Mullen is up. BuzzFeed is up 5%. Open Doors up 5. That thing's been consistently rallying. I can't believe you're green on GMEs. That's insane. Yeah, I think we'll see. I think we still see double digits on BBY. Yours are funny though. We were almost at 2 last week, guys. Oh man, I hope to see it at 10. Hope to see it at 7. Now it's hope it gets back to 2. Rumble's up 8%. A bit premature on my calls for GME. But Ivy's low enough, probably doesn't matter much. We've got some data coming out. GNS 25%. Party City's up 19% out of nowhere. 10 o'clock. Is not being affected too much yet. BBY has been barcoding now, 143 for the low and 144 for the high. Got a bid for 147,000 at 140. Not really any sell walls. 180 there's one, 160 there's a little one. SPY's coming down. Could be on that manufacturing data. Not too bad though. LHDXQ sounds sketchy. Can't buy it. GNS up 27%. Holding up pretty good. Always dippiest before the rippiest. A GNS Reddit? That probably already is one, isn't there? Thanks for your likes, guys. We got 14 of them. Well done. BBY flushed through that 143. 142 is the low now on this. Yeah, call is up 20%, that's right. 18. I think there probably is a subreddit for Genas. Have you looked? I wonder if I should get spreads on my GME calls. Probably should. I'll wait for if we get a rally and I'll sell some calls on him. So 142 is the low there. I guess that is that this wick? 40, no, see. Well, that is that wick, so that could be another level we hold even. Wick there and here. Yeah, both those are 142. But might move down to that bid at 140 even. Let's see, what does this do for our head and shoulders? Well, at the very least, it'd be nice if this was a wick. Wick down here. But it's still there. See if I can get a better price now. Cash card puts only down 9%, so I could open up some more. So now this barcode range is that 144 is still the high, but the low is 142. GNS about to hit 30%. Kind of wicking up here. Spy's got a wick on the bottom. Probably about to hit a new high here. No more downs. 300 more. Bobby for Moon Pirate. Smart man. Going with his conviction. This is exactly who you think it is, Ace. I know I might do some more cash secured puts here. Cheaper it gets, the more I can buy. I'll have the big hammer. There you go, Tesla. Yeah, now I'll have 11 days on those contracts on Tesla. Guess it's up to JPOW. Shorted or selling? Both. But that's also under the assumption that we trade in a free and fair market where supply and demand affect the price. Dr. Disrespect AAA game will have Jimmy's wallet. Did he do it? Did he link? No way. That is sick. No, I haven't heard about it yet. I know, yeah, his game, whatever, what's it called? Death Drop? That was called something like that. That one? I thought he was a great candidate for it because he's very forward thinking, and when he announced that game and having like NFTs in it, he got a lot of hate on it because NFTs were just, you know, everyone was. I mean, all the media was hating on NFTs, so the general population usually just agrees with media no matter what it is. So that's awesome. I was like, that would be a good fit with GME. That's sick. I'll have to look into that. I still watch his streams. I guess now that I'm streaming, I don't really watch his streams anymore, but I used to watch him in the background. Um, but I'm like way behind. I don't watch it live. I watch like catch up. So yeah, I don't even know where's at on that. That's cool though. Yeah, that could be big. He's got a huge following. Did some cash good puts. Nice, yeah, 1.5. I mean, if anything, you could trade him, Moon. Like, not even let him exercise if you want. On any kind of pump. Wednesday, Thursday, probably be up. You know, we could get up 70%, 80%. That's what I did last week. I closed out my cash good puts on Friday. They were up 80%, and I closed them out before we started dropping. And I could have held them, but they would have gotten exercised, and then I couldn't do them again. So, yeah, that could be big. That could be a big first catalyst. There's a new high on SPY, 405.97, 406.48. I see maybe the next resistance. Super hot. This is really looking like this chart back here, guys. Had like the month of sell off and then a big, epic bear market rally before potentially this. I think this is maybe next, and that could be with Powell tomorrow. Nat gas is holding its level. BBBY 142 is still the low. There are multiple wallets that are attached. Oh, to his game? Yeah, he's you know, he's in his 40s, I think. So he's probably a little nostalgic to GameStop too, just in general. I bet he likes it. Spies ripping. Rip continues. I'm gonna look to short maybe at 408 at this gap fill, 4834. Hopefully GME can rip without needing the spy to. It doesn't even care. Don't even care. We'll just chill. Comes out March 17th. Really? That's pretty fast. Pretty exciting, man. I didn't see that news. Did you? Is it posted? Is that on Superstock or where'd you see it? So the January factory orders was negative 1.6%. The consensus was negative 1.8%. First December was plus 1.7. The previous was 1.8 positive. Okay. Nice. Nice. I still moving up here. GNS 21%. Got a little move back down to VWAP. Yeah, nitric acid pretty flat there. MSGM back to VWAP, but it's got a high VWAP there, so not sure that one will hold. That's pretty lofty. Brain chip snaps up 11%. Full buzz. Nolan, GTII still going. Oh, BY broke it. Sold BY. Well, at least it seems like you're honest. Hey, Donro. 1,420. I guess it didn't make a new low. Did you just sell it now, or did you sell it before? I couldn't tell with all your negative talk if that was because you still held it and you were just bitter, or because you were negative because you wanted to get lower so you can buy more. You didn't sell anything. Very confused by your statements. Those cash puts are still up. Crazy. Oh, it kind of broke out there for a minute. For a quick wick. Oh, I didn't see that as one chat. I see. Well, GME's chilled out. BBBY is bouncing up here. Let's see. Still in that barcode though. High of 144, low of 142. Yeah, Tesla's cutting back their prices of their Model S and Model X. I think like 5 grand and 10 grand. Might be part of the reason for the Tesla pullback. There's a move up on BBBY. Looks like it's getting back up to VWAP. Yeah, Tesla's only down 1.3, but market's ripping, so definitely bearish. Chevron Mike Worth says gas market more fundamentally changed for long term than oil market since Ukraine war. The U.S. housing market isn't going to see a 2008 size crash, according to Reuters. BBBY 140. Let's see, 145 on the high of this candle. VWAP's a little bit higher. Do some more cash secured puts. I think it's maybe found a floor. But last week we were able to make on just those cash secured puts on one of the accounts $900. Not 800. 900 was a total credit, but I bought them back I think for like 800, so or 100, so 800 on those, and then the other account is about the same because I had about the same position sizing. So not growing share count by doing that, but receiving premium. And then I'm also just buying shares. And that's a strategy you can do. You can just take the premium you received and buy shares with it. There's a slow accumulation of shares, but it basically is giving you free shares. Buys holding out up here. GME's not moving up yet. GNS 15% now, broke through VWAP. Turco popping. Yeah, Turco moved up through VWAP there. SPY. GME's gonna start going with it. Back to test on 146. How they work. Yeah, I was thinking it'd probably hold around here, that 146. Thought this would kind of be support, but yeah, it did dip below that. Kind of along with that spring test in the Wyckoff. Kind of have the support it builds and then it breaks through it. More or less a false breakout. I don't know if that's this yet or not, but that seems to be the case. Before a rally, you're going to get a new low and then it rallies. Then on the end of a rally, you get a new high and then it dumps, right? Here's a nice example of the other side of it on UNG. Had a rally. It's kind of a grinding and then it made a crazy rip up and then it dumps under here. So, yeah. sorry, I got a phone call there. SPY started ripping. GME did a little bit. Call is up 24. BBBY's bouncing up through VWAP now. Sold your Turca? Noise. Had to sell it. Yeah, 100% on shares. I mean, can't go wrong with that after like a couple weeks. Volume muted on BBY. I also hear nothing. Oh, my volume. Sorry, yeah, I was muted. Itao poppin'? Mountain Crest. This is milk, right? Is that Mountain Crest? Oh, never mind. The SPAC. That's the SPAC curse. GME moving back up to that VWAP level. Low volume still. Tesla's bouncing some here. Man, coin is up 6%. Look at this thing. Ripping. Oh, you guys were sharing some interesting DD about all the different tickers correlated with BBBY, and I even saw coin mentioned in there. Didn't have time to read through it. Maybe on stream today. GNS is bouncing there a bit. Ala holding out. Let's see, those Phil. Phil. Fire the inverted or a hammer up there. We'll see if it turns around now. He's back maybe to VWAP. So I haven't opened up a large amount of BBY cash grid puts yet, like I had last week. Maybe just buy some shares in this TD account because I don't really have many shares in here. Most of my shares end up being my long term because I couldn't have buying power on the other ones. Rumble is just rumbling on up. Look at this chart. Rumble tweets Donald Trump Jr.'s opening week recorded over 1.2 million views in his live video podcast. Opens new headquarters in Longboat Key. I don't know what the catalyst is. Maybe this new headquarters? No, that was 4 days ago. Fine, never mind. Looks like it's strong. Holding up here above this level. Morning, Gene. General exit. Scale out as best I can. Hold a maybe significant. I mean, depending on what happens. If it's just a rally with no news, probably fully get out. Scale out at different levels. Just looking at TA. If there's news, maybe scale out some of my exposure and then run cover calls on some of my shares to hold for longer term. Don't mind these chumps being sarcastic, Shane. Up down row, he's being serious. I don't really have any long options on it. Well, I guess I have some, but most of my exposure is cash grid puts or shares, so I'm not tied to some expiration, so I can kind of hold it as news comes out or different catalysts. I can capitalize by selling cover calls on it, and then we're selling some shares too. Yeah, no, I know you're not actually. Have you averaged down yet? You got something like $3 or 2.5 or something. A no news rally, 5, 4 even. Yeah, yeah, we could get that. There's a lot going on with Turka, and I don't know really anything about it. There's a lot happening, and that's what I know is that there's just a lot. Oh, it filled that gap. Part of it is like some type of short squeeze potential. But yeah, this was the gap fill we were looking for at 65 cents. That's nice. You're around 150. So have you averaged down, or is that where you picked them up? You're talking about buying it earlier than that. $3 to $5 rather than the rest, depending on what's looking like. Yeah, that's a good strategy. Yeah, I mean, there's no way someone can answer that for you yourself, because so for you even to hear my strategy, like, might mean nothing to you because you don't know my financial situation, you know how much I put in, how much money I'm making, my cash flow, anything, because all that would depend on how I'd exit this. So my exposure on BBY now is quite heavy, so that's why I would be reducing. Even if I want to hold it long term, I would be reducing my exposure to it. So selling some and then cover calls if I want to hold it for long term. YouTuber pump and dump it. Yeah, Zip Trader I guess has a few videos talking about it. What's going on? Golden Entertainment. They have earnings? 8.5, yeah. No? Yeah, they did. Buys holding out up here. Probably keep pumping. Still have that 408.34 level I'd like to see. Nat gas flushing new lows. Or if I should set up a stop loss on it. I don't know if I want to take this thing negative. My cost basis kept increasing with all my buys. Or yeah, put a stop limit on the nat gas. I do want to be dip buying it, but don't look way down negative on it. If it wants to go below my cost basis, I'll just wait. GME's rolling up here with the market. BBY hanging out. Did bounce out of that 142 pretty good though. 144 now. The low on this candle. See if it starts barcoding 144 to 146. Boot money? That was the name. Oh, so you did get more. Nice. Got more shares. AMC got a pop. Yeah, AMC's kind of rallying here. SPY setting up a nice bull flag. Might even go long here to get move up to this resistance, which seems inevitable. Complete Altman shame. I've never heard of this. Food money. Prolific. A lot of financial YouTubers. Prolific. 2021, 2022. You come on YouTube and say, buy this, buy that, buy that. No matter what, it would just go up. Everybody would love you. Tesla's pretty weak on such a bullish market. Uncle Bruce. Yep. I haven't seen Butt Sniffer. The effect of the perma bull. Infection. So I've got another order for 20 more $1.50 cash cleared puts here on this account. I want to get some more shares though. Oh yeah, so my 2.5 cash cleared puts on here, I actually just end up letting them get assigned. I didn't have enough buying power to roll them. It's confusing. They basically won't let me. It's stupid. So yeah, I got those shares, and could do cover calls on those, but I don't want to do it on the long term. Zella. Hmm. Even see this chart. Sucks. Eating bagels. Gross. 200 million in cash? I mean, that's legit. Its market cap's 8 million. Who gave them 200 million and why? Is this even? Transaction processing solutions? Oh, no source. Okay. I keep adding to my order for cash secured puts. I'm doing them at the ask though, so they haven't gotten filled yet. How many could I do on the long term? Let's see. Oh. What? Why? Why? We have to wait till tomorrow for funds to settle? Something happened with my long term. It's acting like I'm below 25K. Nat gas, new low. Yeah, I started buying in here, but there was no pullbacks really, so I just kept averaging and I got my cost basis like up to here, I think. Kind of sucks. All in on Zella? Really? Just going for it? Going for a dice roll? About to break out to the upside, I think. Been bull flagging. It's pinned at the high RSI, which it loves. It loves to be there. That's favorite. Might be. Might be like Turka. People started talking about it and it wasn't too late. You could buy in here, could buy in here, could buy in here. Could still buy in right now. You know, maybe this thing goes up to $1.50. But yeah, if that rumor spreads, yeah, it could become a hype play. That's a tiny float. With like 8 million float? No, that was a market cap. Oh, the float's pretty big. 548 million. Yeah, you're not gonna get a crazy. Wait, that's the wrong one. 121 million. Still not tiny. Small, but not tiny. I have an alert on here, so I've looked at this at some point. I mean, it's good to see the volume picking up here at these lows. Buy new high there. Net gas flushing new low. Might get stopped out. Oh boy. Yeah, SPY 407 breaking out. You may get a little move from it. AMC's holding up. Tesla's getting a big green candle from it. BBY still just around VWAP. High on the barcode on Bed Bath is 146, low 144. You played Turka? Turka. Oh. Oh, never mind. That's just the high on the wick. Thought BUI's gonna make a new high there. Inverted head and shoulders is still looking good. See if I can see my margins doing on here again. I think I have more margin just to buy shares than to sell cash secured puts. Yeah. That doesn't make any sense to me. It's broken. So I can't sell 25 cash secured puts for $1.50. Oh, I guess it's in the money. That makes sense, I guess. See if I can buy more of these. Because it's cheaper than that right now. Okay, yeah, no, it still doesn't make sense. So I can buy 3,000 shares right here at $1.45, but I can't sell 2,500 $1.50 cash secured puts, which is less notational value. Because it's in the money? But why am I even fighting with margin anyways? Yeah. Yeah, that can be the sign of a top. Wall Street Bets starts posting gain porn. Uh, expect at least a pullback or consolidation before another move. So I guess I'll just have to buy some more shares here. My brokerage is forcing me to. Crazy. Highs coming down here a little bit. Whoa, GME had a big pop. There it is. GME's waking up. Noise with some volume. 1940. AMC had it earlier. Looks like GME's getting it now. Let's see. I have a pretty good amount of exposure on monthlies with how GME has seemingly been fixed. I don't think I want to go any more crazy. 1945 though. Right now it's above that 1940 resistance. Hey tree. There we go. Jimmy's getting poppy. 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 Hey, poppy. Just a wee little bit. Nothing crazy yet, but this is a very good sign for a bullish rally into earnings. Maybe through earnings. Have we ever had that? We had a rally into earnings and it continued. No. I mean, this kind of was. We had a couple rally and then it fell off. I don't think Jimmy has ever had that. Not in years. As it rallied into earnings and rallied out. Maybe not in decades. So that gives you your exit right there. Like you might get one pop, but or it's something new that's happening because they fixed it. Okay, there was a rally into earnings and then a rally after 2019. Very small, but you did have it. They haven't announced it yet. But maybe this earnings will be the start of the big short squeeze. Maybe. Oh, nat gas is flushing. I'm not stopped out yet. All that averaging up sucks. Oh, yeah, I got stopped out. Well. My leaps only up 8%. I do want to sell calls on that though. On GME. Buys coming down here a little bit. BBBY is holding up there, still around VWAP 145.
More stable. Tesla's held its range for about a month, hasn't really moved.
Not anymore.
Whereas Apple's drifted to the downside, but now ripping these last couple days higher. If Apple trades above last month's high around Powell, do you think that's as, I mean, to me it feels like that's about as all good of an all clear as you can get.
Joe made a really good point, Oliver. In a day where there's not a lot of news, not a lot of headlines or data, the Apple upgrade at Goldman, pretty solid upgrade, right? And if you look, remember, we covered Apple Friday on Fast Market, and we looked at the fact that whatever you want to say about Apple, it's still an iPhone company. 65.8% of their revenue comes from the iPhone, Oliver. So it's still a pretty good story. You know, interesting, Goldman starts covering Apple with a buy. 2023, they start covering it. I thought
Wait, you got a trading card?
That was the most interesting part of that note for me. But obviously, Apple is not cheap in terms of valuation, but people, like Joe said, they're looking for value.
Rejected that 1940 breakout. Little double top. I think that was a squeeze right here, guys. We got our same normal double top we always get.
And like I said, a continuation.
I know, I'm playing.
Yeah, definitely.
I'm playing
here this morning. As I mentioned, Tesla stuck basically still at $200, but a lot else
doing
in big tech is
the
generally
meme,
higher.
the 4 pictures.
I do wonder if
Wait,
there
you guys
is
have trading
this,
cards?
kind of potential for
I can't believe I gave away
stocks
all
to
those gains on
cause
Natty.
bonds to sell off, though, because if stocks are rallying and
I
consumer
just averaged
stocks are
up
doing a
way
lot
too
of
much. I
it
should have went heavier
because
initially.
the economy's strong, does that create this catch-22 where if equities go too high, bonds start selling off? Because it does kind of seem like, I noticed that last week and I noticed again today, if stocks push up, that early bid in the morning for bonds starts to fade a little bit, Joe. We're not getting any big moves yet, but that's seemingly kind of still the thorn in our side.
I don't think you're getting the big moves because people are waiting for the Powell testimony, right?
Sure.
I think that the moves are
So I'm gonna get
measured
some more
right
calls
now as we
on
wait,
Jimmer.
for what he has to say and what we used to call the Humphrey
Maybe
Hawkins
still
report,
end of
right? The
end of
testimony to it's a semi-annual testimony
end of the
to
month.
the House and to the Senate. You know, some of the questions that I think he's going to get asked, and these could be market-moving questions, are what are your expectations for the terminal rate? I mean, look at what the Fed funds has done in the last.
I've got
month
18.5s,
alone.
19s.
It's increased their expectations for end of year
I'm gonna
rates
look
up
at.
to 5.25.
I'm gonna order to get some
5%
19.5s
or
now.
5.5%. That's up 50 basis points in 1 month. So you guys are wondering, you know, if we're wondering why we saw the equity market see some weakness over the past 3 weeks up until, you know, last week. That's a good chunk of it right there is expectations for the federal funds rates to go up.
Thanks for your likes, guys. I appreciate it. We're at 21, not
I don't know
bad.
if Paul's going to answer, but are more than likely going to be asked are how far does the unemployment rate have to move up? I mean, we're at 3.4%, basically some of the lowest rates we've ever seen. How far does the unemployment rate have to go up before that can really start curtailing some of that inflation that we're seeing on the wage side? And then, you know, last but not least, when we are looking at some of those additional questions would be, you know, what are your expectations for the economy and the consumer?
So
you know,
bids
retail
on
sales in
BBY
January
are
was a blowout number.
filled up quite a bit.
Is that-
142, you've got
was that just a blip?
92,000.
You know, we'll get more
140, you've got
information on March
126,000.
15th with another retail sales announcement.
139, you've got
CPI all come in,
99,000.
all of that before the
Not
Fed,
much on the sell
meeting
side.
on March 22nd or 21st.
Until
or 22nd.
$1.80.
All that data, and if the Fed is saying that they're data dependent, you know, and those numbers come in a little bit hot, then I think that, you know, you're going to see more of a hawkish tone, not just this week, but
Spot looks like it's going to maybe move down a little bit here.
Potential
If it just consolidates, holding this 406, or if it moves down to VWAP.
Right. You know, with all the questions coming. Obviously, it gets kind of weird sometimes as the politicians
Rumbles
ask
slowed
bizarre
down
things
finally.
that we wouldn't ask in the financial world, but
right. They expose themselves.
Yeah, to Joe's point, somebody's going to ask, you know, what are you going to end the hikes at?
Sure.
And if he says something closer to 6% than what we expect, that could be volatility-inducing.
Remember, it's Jerome Powell's ability to be hawkish that will depend, that will make tomorrow's trade. If he's neutral, the market will probably seize on that, as they've done in the past, as dovish, like they did with Raphael Bostic a week ago, right? Even if he says something moderately dovish, the market will seize on that. So how hawkish does he have to be?
GME holding
Does
up
he
here.
have to reset earnings rate expectations and inflation expectations? Because what you can't argue with is the data the last month has been stronger than he'd like, and almost you can make the case based on PCE reigniting on the upside. So he's got to address that, I would imagine.
All right. Appreciate it, gentlemen. Great combo. Good setup here for the next couple of days. Joe Mazzola and Kevin Hanks. Stocks off to the races here. Day 3 of an ongoing rally. And after leading the charge this time, that is the
orange gun.
That's a cool orange gun.
And a lot of experience doing it. Trading 360 with Nicole Pedalides is up next.
Rope is ripping. That's not what you want if you're using rope. You don't want it to rip. Looks like my stop was right on the nat gas floor.
Have here's pants.
Where are the Now, how high is this pre-earnings rally if we get one on GME? 24? That'd be kind of the next big resistance I'd see. 28? Okay. Oh, good. Good job. Morning, Christopher. I'll leave you hanging high and dry. This bid keeps going up on GME. Need a little red candle to get filled. Look at the relative strength of the SPY too. The break of that 1940 might be pretty gnarly. Like a real break. Oh. Ah, market maker. Make me chase. Dude, I freaking hate the options chain on GME. It is just... Little candy. We got a rally into earnings and after, they've definitely fixed GME. I mean, that's a good thing. All right, SPY's coming down here. We've got a bearish MACD crossover, but it's kind of at that support. See if it bull flags or they'll move to VWAP. Literally, nat gas is bouncing a little bit. Chat GPT has. Have they updated that, or is it still from 2001 or whatever, or 2021? Me melting up here. I don't know if I'm gonna be able to get a good fill. Volume got shut off, but it's just low volume melt up. Okay, just put it in the mid and got it. But that mid moved up so much because I kept chasing it. What did I get? 19 and a half. Yeah. Raging Bull sold 3,000 GME. Let's see. U.S. House Speaker Kevin McCarthy to meet Taiwan's president in the U.S. to avoid China's IRE. Citadel charged his clients $12 billion in fees and expenses in 2022. Does that include their commissions? Assuming. GOP Senator Haggerty says he'll discuss rates, crypto with Powell at hearing. A little bit of volume there on BBY to that move to 143. Oh, did that stuff get filled? Oh, I never placed it. So if GME might get a move before BBBY now, if it gets a pre-earnings move, but I'm assuming it's going to be less than what we're going to get on Bed Bath. Not bad though. If we do get to that, what, on the top of that range, 42%. The bottom of it's 25%. Ugh. Might get some more leaps action on GME. Well, I guess not leaps, but January's not quite leaps. Got 20s. Just get some more of those. Keep it simple. Why? You're open to prohibited? What was all that? I think I tried to sell them instead of buy them. Netcast bounce there. GME's rallying up here a little more. I kind of want to get some more calls into March. Get some 20s. Here we go. Okay. I'm getting more time. I mean, the leaps I plan on probably just doing poor man's cover call on them. Because they're on kind of the theta farming account. And then the shorter term ones aren't too short. They're end of March, so not too bad. And then they're all very close to the money or in the money. So not looking for 14,000, 15,000% gains. At least not strategizing for that. Be nice, but you know, strategizing for 300%, 400%, you know, if we get that 25% move, I think that's feasible. Sigh. Jimmy's about to make a big break on that 1940. Fill the gap? Not yet. See if it breaks this levels. this high. 634 breaks there, then 680. Got a lot of resistances to cover before we start filling that gap. But those not fill? Fill. Important ED for media and media. All right, check it out. Trying to have a date with Phil here first. Here's man. Do still like the low IV. This IV could double pretty easily, I feel like. Finally. GME popping through 1940. Remember that 220 gap fill? I like, when I first read that, I didn't even know what stock you were talking about. That's sad. It's not that price anymore though, is it, right? Yeah, not since the split. So you're looking at what, this 72? Is that the 241? Or is it the one, or the 40 range? Oh, kind of rejecting now. It is looking good though for a rally into earnings. Hope it's an old GME type rally into earnings like this. Or this. Or this. Are we, let's see. This was the zone I thought we were in. Looking a lot different now though, because it never made a new low. But there was lots of times where we'd make a higher low before a rally. Like right here. A little higher low. Here. We used to only make higher lows. Higher low. Higher low. Both right before rallies. Even back here, higher low for a rally. Yeah, that's true. There are, I mean, my cost basis was like in the 60s. That's somewhere up there.
take us through the trades. Jessica Inskip, Director of Product and Education at Options Play. Good morning to you both. Jessica, your first trade here, the name you're looking at is Apple. We talked about earlier a buy rating today from Goldman Sachs. What are you thinking here?
Absolutely. So it's up 3% on the day on the back of that analyst upgrade from Goldman Sachs. And I do see Apple coming up to this really key resistance point around 157, 158. So can't wait to see Ben to go into the charts to understand that. But when that happens and we have those strong updates, it's a great time when there's that strong resistance to sell a credit call spread. So from a fundamental perspective, Apple was one of the main beneficiaries of those supply chain concerns and consumer demand with their very expensive iPhone, and some of that is subsiding. However, those macro headwinds still exist. So from that technical perspective, even with that analyst upgrade, I think a really great short-term trade here that I see is selling a bear call spread at that 160 level, capping my upside risk at 165. Overall, I'm collecting 30% of the width with a $500 risk altogether. Of course, we subtract the premium that we received about 130 from that. So it's a low risk trade coming up to resistance with a short-term stance on Apple.
Right. And I am going to ask you your big picture on the market, too, as we're hovering near some recent highs. But, Ben, as Goldman Sachs puts this 199 target, a buy rating on Apple today, and it has this move that Jessica is talking about today, what are your thoughts here?
Yeah, they're calling for something like another 30% to the upside. Nicole, good morning, guys. Well-defined trend environment to the upside, but nearing some areas of resistance that we saw last month around this 155 area, 157 area. Let's begin with the double bottom back in January around 124, 125. Well-defined trend environment, and then sideways consolidation. Now, last time we looked at Apple, I actually identified an area of consolidation that we had been forming. And let's just show you what it was. It was around this 153 area. We talked about potential weakness. If we did see some below 146 would be a concern for the bulls. We did see a pullback below that level, but follow-through was kind of limited. 144 is where we bottomed out and sort of worked our way back up. So a bit of a mess now after a really well-defined trend environment, but the bulls want to kind of look at this as a larger area of consolidation. So I went ahead and did that, and you can see if that's the case, you're looking at 151. But no matter how you slice it, we have been in a trend environment to the upside, and we've lost momentum to the upside after topping out, I mentioned in February, around 157, 158. So we've got a very well-defined area consolidation. Again, we'll call it 157, 143. So Jessica's got her eye on a key area right now. If we can get a breakout, the bulls are going to see continuation of this pattern. If we roll over here, it's not good for the bulls. Let me show you why when we take a look at the daily. Again, here a trend up, but as we look at the daily time frame, let me show you a well-defined trend higher here, but look, we're at a key pivotal area, 155, the middle of a range we've been in, basically going back to, well, we'll call it the fall of last year when we topped out around 183. So lastly, I'll show you exactly where we stand in terms of the 50-day, the 200-day moving average. This move up has us above both of those key levels. It's got us up about 20% year to date. RSI is a little bit lackluster to the upside, so kind of supportive of the potential to roll over here. Notice these highs coincide, again, with the highs that we saw last fall. That's the next hurdle.
New high on
here
the
to get up above.
SPY.
This
Jimmy's
155, 157
testing that 1940 again, over and over and over.
right now to keep an eye on.
Right, and as we've seen that move higher in the
yeah, I think they just
and the higher
traded
moves,
shares like they've been doing on
from
GME and
Goldman
global
Sachs,
market
the
for
pressure still,
however many
we've been
decades, I don't know.
somewhat range bound, and that's what I
Instead
you
of
showed us
actually
that
issuing
many
a
times, Ben,
dividend.
and that's what I wanted to ask Jessica too. I know you were talking about the supply chain
That's
pressures and
my
that those
take
still
on it,
exist,
TJ.
and I just wanted to know your bigger picture. I mean, the Nasdaq had a winning week last week. It was up 2.5%,
There we
it's
go,
up
Jason. Stub his
11%
toe.
year to date.
Yep.
But do you think we're somewhat range bound, and as we move to the higher end of the range, for example, the S&P's at the highest since mid-February, does that help to make your case for pulling
What
back
crazy
a little
you
bit?
like Ric Flair?
Absolutely. That's my overall market view from the macro perspective is we are certainly range bound.
Before that's BYN is full.
I am eyeing 4,100 as our next short-term resistance. But prior to that, think about what defines a bear trend or a bull trend from the trend perspective. We're
over that
looking for
1940.
higher lows and higher highs. So
Probably
we
should
need
get
to
some
overcome
more.
those previous lower highs and lower lows subsequently to really be in a solid bull market. So my really key resistance level that I'm watching is 43.25 from a technical perspective. And then additionally, just as our previous speaker was saying, it's that jobs data I'm really paying attention to. What is the Fed going to say? I love that narrative of, do we fight the tape or do we fight the Fed? We have to realize is from the tape perspective, there are
24 on
more
BBY,
retail
here we
traders than
come.
there used to be. And from a Fed perspective, there is a human really digesting that data and making decisions. So I really think it's a balance of both.
That fill this gap.
Range-bound market.
Right, understood. And you wrote that in your notes when you talked about Apple to us even prior to the move today, that, you know, it is coming up against some strong resistance around these levels. Now, Meta's a different story because of the focus on efficiency there and some of the revenue drivers. Tell me a little bit about Meta, which is around 189 today.
Absolutely. And I do think it's a time to look at tech as well, because their largest headwind, of course, was a strong dollar. And we've seen that trend come down. And if that's peaking, then that's absolutely positive for the overall tech sector, especially those with a global revenue exposure. Now, Meta was probably lost so much last year from a growth perspective. And that was because they had a huge investment within the metaverse. But Mark Zuckerberg came out and said he's driving efficiency and focusing on revenue. And so I wanted to see some steps of him going towards that before I would talk about purchasing this security.
Even though we're kind of double topped.
With TikTok ban coming up
within
really. Government discussions and Meta focusing on new revenue drivers.
Power.
Twitter tried that. It seems it's doing seemingly well. Elon Musk told us he's at break even for Twitter for those driving efficiencies. So he's setting the trend that's certainly following with Meta. From a valuation perspective, they're trading at 19 times next year's earnings. They expect positive growth and EPS, and that is a good indication that it's still seemingly undervalued and perhaps a good buying standpoint. And additionally, on the last point, I love to look at relative charts as well. And this is showing a breakout versus the S&P 500, which Apple did not, which reiterates that bull case.
Yeah, I mean, I'd
like that little double top though on that wick.
As you're leaning to more of a bullish breakout here. Ben, your thoughts on the Meta chart?
Well, similar pattern in terms of what we were talking about with Apple, right? Nice run up, a little bit of a pullback, but the retracement that we saw in terms of Apple is a little bit more significant than what we saw in Meta, but in both cases forced us to kind of take a step back. Let's just begin with the trend environment to the upside, 88 to 197. We're going back from the beginning of November. You can see a high conviction move up in the beginning of last month, and then this was the area that we looked at last time. We focused on Meta and
intraday
an area
bear flag,
consolidation that was, well, most recently forming around that 190 area. Here's the
down a little bit.
I mentioned, so a little bit of a dip, but notice we never took out the area that was established prior to the one that we were forming. So what I went ahead and did here, a similar situation, just kind of zoom out a little bit and establish just this kind of wider range area consolidation. We've got a pretty well-defined lower, pretty well-defined upper extreme, and it sort of feeds into our narrative of this bull trend that's been playing out. So again, sometimes it gets a little choppy and you have to take a step back. That's never a bad thing in terms of viewing price activity. I think always distancing yourself from the tick for tick is a good thing in my opinion. But let's do that. In fact, let's move away from the hourly chart and into the daily time frame, because here you can see the move that we just looked at, somewhat counter trend to the longer term move that had been coming into play. And then you can also see how it gets us back into an area of resistance from last summer, July.
Yeah, I think so. I don't get tested. I don't believe the test. But I think I got it
range.
more than once.
In a similar fashion here,
I got like a blue version of it second, but I got probably the normal one first.
On the way down, but you can
it wasn't COVID that was necessarily that bad. It was
so in this instance,
it gave me like
consolidation into
me strep throat fall, but like really bad.
What's happened since we started to
so you just like get all sorts of other sicknesses from it. It just kills your immune system.
What I did here, again, just zooming out a little bit and establishing a wider range consolidation area that's forming, and that's why again we're testing a key area. Jessica mentioned the breakout. What follow through has been somewhat limited, but we have been in a bit of an uptrend, which we identified again on the hourly. So
see
let's
if
just
that
see where things
holds.
stand real quick in terms of the 50-day, the 200-day moving average, because Meta is above both of those closely watched moving averages. Look at this, year to date up 56%.
Yeah, I had all the symptoms the first time, and then the second time there was like a flu type COVID thing going around.
But the
You got that. That one
saw
wasn't bad. It was like 24 hours.
And again, testing key areas of resistance, as you can
and
see.
the other one wasn't actually bad. It just
summer. So another stock that's in a big
we're
area
pretty
right
healthy,
now,
though.
one to keep an eye on.
Is
More
this
the
the
middle
strep
of the
that
range.
made me
Meta,
almost
as you
have to go
can
to the
see in this
hospital?
instance on the daily, a little bit more towards the upper extreme of the range. I'm sorry, I said it the wrong way. Apple versus Meta.
Yeah, no. And you said how it's reversing the trend that we had seen. And, you know, you're always making great points, Ben, and thank you for that.
250 for 1
I
second.
think
If it goes for
also
250,
another point that Jessica had
you just want
made
to
is
buy
you
more,
said
you're not going
tick
to
for
sell
tick.
it.
I was thinking about TikTok and, you know, the competitive landscape. And there's been a call for, you know, those who work in government to take TikTok off the phones. And you think that big picture in the competitive environment, your thoughts, Jessica?
I think it's certainly
GME kind of rejected that 19.4. That's going to be a big level, I think.
Love the algorithm, and
I guess
I know there was a lot of government documents or talks even in Trump's time where there was some talks about moving it to the U.S. But you have to think about the contenders and that competitive environment. When there is something that takes a large market share,
that's what those letters
others,
in that sequence say.
Are going to follow suit. So it's going to be interesting to see what the integration of AI is going to do with that social media space. But of course, beneficiaries are going to be Meta, YouTube Shorts. They have a similar revenue sharing model, even Pinterest or Snapchat. So a lot of the social space is very interesting, especially with that younger generation, as that's where they spend a lot of their time and ad dollars are derived from.
Yeah, and from the younger generation to maybe the older generation, from something that may go away that's not going away, Johnson & Johnson, you were talking about a lot of the, obviously, pharma products of Johnson & Johnson and a big picture of growth.
up 13.5.
Tell us about that.
Absolutely.
Nice.
So this is a
Using
defensive play
support from
here.
Friday's high.
And I do need to give credit where it's given. I got this trade idea from Tony Zhang, my colleague over at Options Play. But they have a focus on M&A with their executive management, and that's something that's proven to be really positive when you have those proven leaders coming into a company. Look at CRM's performance, for example. Now, they have oncology drugs within the pipeline, and that made a huge portion of their revenue. Now, if we have to be in consideration of COVID and their participation in that, if we even strip out COVID from their revenue drivers, they were up considerably year over year, which makes them a key core interest from a fundamental perspective. Going into where they're trading 14 times next year's earnings. The S&P 500 is around 18, so anything under that is an indication that it's perhaps undervalued. They have positive 3% EPS and revenue growth that they're expected for next year as well. So again, indication of positive momentum. Those drugs in the pipeline certainly help add to that revenue story, suggesting that perhaps even more EPS or growth revenue is suspected. And then from a technical perspective, I would love to hear Ben's take on that, but seeing breakouts as well.
Right. All right. And we'll be talking more about TikTok and Meta and Snap. You know, Kevin Green will be looking into that more closely. By the way,
he just wants to sell popcorn to the children.
Johnson & Johnson, Ben, final on the technicals.
Yeah, I'm excited about this one, Nicole, because we talked about Apple, how it's in the middle of the range right now, testing a key area, 155, 157. We talked about Meta testing the upper extreme of a range, but Johnson & Johnson's now testing the lower extreme of a range that we've been on the daily time frame. And this is a stock where you're going to see a complete different scenario than what we were talking about in terms of our first two names. Let's begin with the hourly.
142. Let's see, selecting the support there a little bit on BBY.
All the way down to the lows recently around 151. And here I just established a couple of the areas that I saw that my eye was drawn to in terms of areas of consolidation.
The penguin,
I don't want to get too ahead of myself here, but I wrote
just like Adam is way
taller.
taller.
This area 153 that we're starting to build around right now, but you can see migration of value to the downside. It's pretty well defined. Again, this chart goes all the way back to middle of December, and you can see a well-defined trend lower. So let's just step away from the hourly into the daily time frame.
That's right.
And here you can see the move we just looked at. We're talking about very much counter trend, right? And a blip on the radar relative to the longer term trend that's been playing out. We're going all the way back to 2016.
GME had a little red candle this, but relative strength's not bad to down it.
And then you can see the areas of value that formed at higher and higher levels. Let's just go ahead and identify two of them. Just to keep it real simple, 130.
I hate the barcoding option prices.
That's the pandemic spike out of range. And then basically since then, 2021, we went sideways around 170 with an upper upper extreme 186 and a lower extreme around 150. And in fact, let's take a look
gas
at that
is
because
now
I
bullish on
mentioned
the
that
5 minute.
we're testing this
See if it
lower
makes a move
extreme
up to
right
VWAP.
now. 151, it coincides with the lows that we saw back in the fall of and beginning of 2021 prior to this run up that we saw.
high to the
and
moon.
here you can see again just near that
how could it-
key
could it
area on
not
the
with a ticker
downside
like
here.
that?
So sounds like Jessica thinks we'll hold in this range. Let's just check on where things stand in terms of the 50, the 200-day moving average. Johnson & Johnson well below both. Also, you can see down 12% on the year. RSI, though, starting to inch up a little bit with some of the bid activity we've seen off the lows. So let's see if we start to reverse the trend here and work our way back into the middle of that range that we looked at on the bigger picture daily there.
Yeah, long list of
BBBY,
drugs. I
so
see
you
one for
might
prostate
barcode it at
cancer test there. I think that chart
142. No,
prior to
142.
this one
Yeah,
that really
143.
showed that we're right at that
Beep, beep, beep,
lower
beep, beep.
end of the range there,
Give
Ben.
us some whale teeth.
Final thoughts, Jessica. You brought us 3 great names today: Apple, Meta, and Johnson & Johnson. And this is we await
Nice little double
to hear
bottom here,
more
maybe
from the
too.
Fed and jobs. Of course, Bostic last week gave a boost and a rally to the market when, Raphael Bostic's basically
It
saying,
does
I don't see
bounce.
the need for the 50 basis points at this point. That brought a little optimism. But what are you thinking here? What's your big picture for this week?
Yeah, so the big question that I have this week is that reacceleration that we saw in spending in January. Is that softening?
Hey,
And
holding
some of
up
the
right above,
February data
right
that
under
came in is
that
indication
1940,
that
man.
perhaps it is, with manufacturing coming in a little lower. I'm paying attention to the jobs market. If we see moderation in job growth, perhaps that's the data that the Fed needs to justify the 25
moon.
bips rather
You
than
copy
the 50.
nose. Ah, that M.
Wonderful to see you both. Thank you.
I don't
Jessica
hold
and
any weight
Ben.
on that M.
Jessica Inskip, Director of Product and Education and Options Play, and our own Ben Lichtenstein on the charts. Thank you.
Liechtenstein.
Coming up next, let's spotlight all things EV, electric vehicles.
Do
Ford
it.
looks to ramp up production. Tesla cutting prices again.
Thanks
Much
for your
more
thumbs
on
up,
that
guys.
Following that Tesla Investor Day, too. All the news coming up.
Danke. I love you. Rum holding up well. Kala with the bounce back to VWAP. Unez still using Friday for support. Friday's high. Nice little double bull flag action. Yes. This looks bullish. Beer and wine sales in Canada fall to an all-time low. I mean, look at it fighting that 1940. It's gonna get that push. Maybe today it'll get that push. Nomura raises forecast for ECB terminal rate to 4.25. Previously it was 3.5. Bearish. Gunvor CEO says high gas prices led to demand destruction last year. This will not come back. That's the only thing. Searches for soft landing are back to levels not seen since 2008. Unusual Whales has a chart for that. That's funny. With tightened policy, tech stocks won't outperform markets as easily. Big short investor Steve Eisman has said. How about BBY? I almost made it to VWAP.
Now, even more so, and you're watching names like Meta and Snap as well.
Yeah, definitely. We are starting to see some momentum when it comes to trying to ban or prohibit TikTok in the United States. And yes, we've been actually seeing this, pan out here for the last 4 years. And now Senator Mark Warner and John Thune are actually making a bipartisan bill to try to give President Biden the ability to be able to ban or restrict the technology here. They are obviously concerned about the data that China is obtaining from Americans, and then their ability to be able to secure that data as well and be able to not utilize it as a propaganda machine. So that's really the biggest concern. We are seeing a move to the upside here when it comes to Snap. It is up about 13% today. It's up over its 200-day moving average. First time it's actually done that since October of 2021. And then we also have Meta up about 1.3%. Remember, they do have their Reels product that they're still trying to get some traction on and try to make profitable at this point in time. Now, Nicole, this would impact around 100 million Americans. Right now, that's about the amount of Americans that are actually utilizing TikTok. And I think one of the questions that a lot of Americans are going to have is, one, compliance, and then how are they actually going to enforce this restriction? If there's any type of way around it, how are they going to be able to track it as well? So this is going to be a very interesting development, especially as we get into a presidential cycle here in the next couple of months. I'm sure it will probably be a hot topic, especially for those that are millennials, Gen Zs, those that typically use the platform.
Yeah, and as they look forward to banning this technology. Look at, that move in Snap, it's up almost 13%. That's a big move. Kevin Green, thank you. Senior Markets Correspondent for the TD Ameritrade Network. It is time to spotlight electric vehicle stocks. We had big news from Tesla last week. We have big news from Ford now. Garrett Nelson's with us, equity analyst at CFRA, to tell us all about it. Thank goodness you're here. I'll start with the news now of Ford. 95 million, over 1,000 union jobs. They are planning to double the Mach-E
higher
production,
barcode level.
triple the Lightning
144,
production.
142
Broncos,
now.
They're really ready to ramp it up, and they're
Even
seeing
the tall
demand for
barcode,
everything
maybe.
from electric to gasoline to hybrid, right? What's going on? What's with the wild demand we're seeing, or that they're saying?
Yeah, let's look at some time frames here.
Yeah, thanks for having me. A lot of that is specific to Ford. They came to market early with an EV, the Mustang Mach-E. They had a lot of success with that, and they introduced the F-150 Lightning, which started shipping last May. They got up to a reservation count of over 200,000 units on that model, the F-150
Got 18
Lightning.
bars there.
At that point, they cut off taking reservation because they don't want to have a point where it's 2 to 3 years before the customer actually gets the vehicle that they ordered. So Ford has very quietly become the second best selling EV manufacturer in the US behind Tesla. They're a distant second,
That's 18
very
bars.
distant second, but still
From here to here is
ahead
18
of their
bars.
peers.
From here to here is 18 bars.
They've done a pretty good job, being earlier to market than,
Here
of course, their chief
there is 18
rival
bars.
General Motors, which will have a number of EV models.
And then it's had another little one
year.
just like back here, right?
What's your rating
So maybe
on
from here to
Ford,
here
which
is 18.
$13 today,
20.
versus some of the other automakers? Which
18's
ones
back
are
here.
buys, or in your book, strong buys or holds?
Let's see if we got another 18 bars.
Yeah, so we have
This
a buy,
one.
$17 12-month
a little
price
further
target
now.
on Ford.
20 bars
We
again.
have a buy on Tesla. Our 12-month price target is $250, and we have a sell on GM and on Rivian,
19 bars.
as well as Fisker.
Wow, GM, Rivian, and Fisker, sell. There's no in between, huh? So when we look at a name like Tesla, and there's
20
so much
bars
to
puts it
discuss
out
from last
in
week's
May.
meeting, the things that come to mind for
Maybe.
me is obviously
Might have to
succession
wait.
plan, Mexico plant. Even though they're reducing prices, they still make a good margin. Is it a battery company? The semi-truck and the Cybertruck.
Not sure if we're in that
things that people talk about
sort
when
of
they talk about
cyclical
Tesla.
move on
What do you think
BBY at
about
this
as a
point, or if
pro
it is
who
just
comes
kind of
into these
news
numbers?
related. And with it being so cheap,
Yeah, we've been
Unless
bullish
we'll
on
be able to hold
Tesla
down these
for a long
levels
time, and long term, we're very
for that
bullish
long.
because we think by the end of this decade, they'll be the world's largest automaker in terms of annual production and sales. There's a clear path in our view.
Well, some of
to
this,
their
like,
goal of 20 million units per year.
this one was earned like after
Anyone
earnings.
who sat through the nearly 4-hour presentation
Necessarily
last
from
week
earnings, but
had to have been impressed with their
so, like, these
efforts to
weren't really from
continually
earnings.
cut costs. Announcing the new plant that they're building in Mexico, which can be a massive,
So
one of the largest auto
maybe
plants.
don't even count this one, and
maybe
we're
the
just on
largest
a
in the
longer time
world.
frame.
As well as their
I'm
additional.
not sure how cyclically, like, I
growth
think
plans
there is some
beyond that.
cyclicality
So we really view
to
a lot of the
the
bull
way
bear
BBY
argument.
moves.
Is,
I'm not really trying to
well,
track
why
it
does
though.
Tesla trade
I've
at
just
such a
seen it
premium to
move
all
with
the other automakers?
with
It's expensive.
GME or
It's,
AMC at times.
they
So
just don't. A lot of analysts just don't get the
I setting up a
valuation.
bear flag here.
But in our view, it's really a 21st
It'll come down to
century
VWAP.
sustainable transportation and energy supplier. So it's a lot more than just an automaker that should trade at much lower multiples. And so that's why we're bullish on Tesla. In fact, we view the stock as undervalued here, both on a 12-month basis, and we think investors will do very well, if they have a 5 to 10 year time horizon.
And meanwhile, you have people who come on who are so bearish on Tesla, saying how frothy the stock is, it's overvalued, and you're on the other side of the coin. I think more people than not are fans of Tesla, and I thought it was interesting. You said this will likely be the world's largest automaker. I mean, just in even whether you count regular cars or whatever. What happened to NIO, XPeng, Li Auto, and BYD?
Yep,
Any
SPY
of those names
moving down here a little bit more.
Sure, the Chinese market has produced some pretty
GME's
formidable
holding up relatively well.
That
And
have
relative strength to
emerged in
SPY
the
is
last year or
a good
two.
sign for GME.
BYD is the largest, but they've had a lot of success, and I think that's probably going to be their number one competitor longer term. The Chinese are ahead of a lot of the traditional automakers in terms of their battery technology and their innovation and their success in terms of ramping up volume. So, BYD is probably their number one competitor, and then there's another. Many other smaller companies, NIO you mentioned, XPeng and others in that market. So it's a very interesting dynamic that's occurring over in China.
And just the penetration of electric vehicles, there's always the hurdles of the materials that are needed, the electricity that's needed to power this kind of shift in transportation. You have a long-range sort of thought for the USA?
Yeah, so last year in the U.S., of course, the U.S. is far behind, other major markets in terms of EV adoption. But last year, EVs accounted for just under 6% of all new vehicle sales. Of that 6%, about 2/3 of those were Teslas. So you have all the other automakers, collectively accounting for about 2% of all
the first time
vehicle
since
sales
2001
last
investors
year.
can make more money holding cash than a traditional stock bond
We see
portfolio.
the U.S. market becoming oversaturated with all these new models coming to market very soon. There's going to be EV market oversaturation here in the U.S. We're bullish on Tesla, though. Of course, they have the Cybertruck, which they reiterated first production around mid-year this year. The reservation count on that model is 1.7 units. That's just unheard of reservation count. And so you look at what that means in terms of near-term revenue and earnings growth. It's going to be extraordinary, and it's going to really add a lot to Tesla's earnings growth over the next few years. But based on our work, the number two EV in terms of reservation count, it's Ford's F-150 Lightning.
It's like a historical event,
which I mentioned has a reservation count of only 200,000 units. So it's really a fraction of the Cybertruck reservations, and that's another reason why we're so bullish on Tesla.
Understood. Garrett, I'm glad you were able to be on with us today, telling us this big picture story. Garrett Nelson, equity analyst at CFRA Research. Thank you. Coming up, we'll take a look at the disruptors. Squarespace is the name today. Reports its earnings tomorrow.
Yeah, holding up well. Genius kind of sold off some. Still looks like it wants support on yesterday's high. Open door. Box D holding up really nice. Well, I guess buying power for futures tomorrow during Powell might be fun.
everybody was forced to. And then I'll capitulate willingly. GME moving back down to VWAP. All those calls I bought. Let's see. Not all of them. Only 2 of them are negative, showing just how the IV is not. It's low enough to where, you know, it gets to a point where it kind of hits a floor. And it'll decay, but if there's any price action, it's going to just go up basically. Yeah, did I buy 19s this morning? Maybe that was yesterday. Yeah, I bought 19s this morning, which is usually the highest IV. And those are still up 11%. 19.5s and 20s are down 4% and 8%, so not bad at all. Of course, being in the money or close to the money helps. BBBY got a bullish MACD crossover. Might be double bottoming down here at 142. I've had an order to sell more cash cleared puts like all day, but they're at the ask, the bid, it's 1 cent apart, but they don't fill. Tempted to get some GME shares even for a trade. Little swing trade maybe. Turkish still rallying? Whoa, yeah. It's not on my watch list, that's why I've been clicking on it. Put it on. It's broken. What? Okay, whatever. Yeah, it kept going. That's nice. SPY back to VWAP, and VWAP actually came down a little bit there. So the short here would have been nice on that little double top. Not a huge move, but so far at least. You should buy an AV. Yep, I'm gonna get some more shares. So my bid is not showing up here. Big surprise. Guess I could change the routing. I've not done that on Fidelity before. Sure, it even, I don't even know if I want it to go to lit exchange, right? That causes the price to go up. So that's why to me it's like dark pool it, do whatever. Let me buy and keep the price low. At some point it'll go up. Yeah, no, because I'm right here at 143. So maybe I'll test it. I think I do. How do I do it on Fidelity? I have to like enable beta or something, like a beta mode to get it to IEX routing. Look it up. Of course, Reddit has a post about it. Might get filled before that happens. I want to test this actually. Cancel it because it's not showing up. At least not here on Weeble. Cancel it. Download Active Trader. I have to do Active Trader Pro. I can't do it on. That's why I don't see it. Okay, I'll try and use Active Trader Pro. See if I can get it on IEX. It's all got to be on ATP though. Can't do it on. Can't do it just on the browser. Okay. Yeah, okay. I don't know. I log in and it opens up my browser and brings me to Fidelity. Never had that happen. Heck. Why? I bounce in there basically on VWAP. GME actually hit VWAP. I think Weeble's VWAP sometimes is a little bit off actually. The heck? Not letting me log in on here. Dude, you have to reinstall it? I haven't used Active Trader Pro in a long time on my desktop, but never had this problem. It loads up, it brings up a login window. I type in what I think is the right username and password. Then it opens up the Fidelity website. Do I have to log out on the browser first? No. Never had to do that. Right. What? Last time I logged in was probably months ago. I don't know. Probably. Well, on Active Trader, I log in on Fidelity every day, the browser. Maybe I'll log out online. Maybe that's what it wants for some reason. Try it again on here. Sorry for all the dinging.
That you do like, or is it the whole retail sector that you're worried about, the macroeconomic conditions, or are there standouts, David, to you?
Well, I think there certainly are cheaper
No, it does the
stocks.
same thing.
At Morningstar, we like to take a very long-term view. I think if you want exposure to the athletic space, I would probably buy Under Armour. Under Armour's had some very difficult years, but Under Armour just had a new CEO that came in. I think the company is on its way back. It has a very strong balance sheet. It is consistently profitable. And I think compared to a lot of other apparel retailers and manufacturers, I think Under Armour is quite inexpensive.
Yeah, and John, same question. Other names that you're following closely that may even be buys?
Well, here at TD Count, we do a lot of proprietary survey work in terms of which brands and retailers are gaining share and preference and gaining market share and have the best product cycles. Within athletic, we like Nike, we like Lululemon, Deckers. Deckers is an all-time high today. Those would probably be our three favorite within athletic footwear and apparel. So, and again, Dick's Sporting Goods. Gains in our proprietary survey data in terms of consumer shopping preference since the pandemic began. We think those gains are durable.
All right. Thank you for all of that, David and John. David Schwartz, equity analyst at Morningstar. John Kernan, managing director, senior equity research analyst, apparel, footwear, and textiles at TD Cowen. Thank you very, very much. That's going to do it for us here on Trading 360. Thanks for being with me. I'm Nicole Petalides. I see you every day at 11
No, it doesn't
a.m.
ask me for that on Fidelity.
Eastern Time.
Or on
See
Active
you
Trader.
too for the watch
I might have to
list.
reinstall
But
it.
keep it right here.
Don't know.
Fast Market is next.
So with more shares I'm getting, I'm gonna do cover calls on quite a bit of it. If we get a pump, just a little spike sometime. That. Rom bouncing off VWAP up there. Buy with a doji here. That 408.34 is still on the table for today. I don't think this rally's over. A VWAP buy maybe would have been play. App holding up well. STS. RDZT. That's coming down a bit now. Broke Friday's high. The support. Maybe a gap fill here at 36.50 or so. Cover calls, I mean, you pretty much had to sell them at open on BBY today. Never know though, sometimes you get that morning rally.
Initially, we had yields down pretty significantly. The 10-year got below 3.9%, but weakness in the dollar also lending support. What's your take here on the markets?
Yeah, Thursday's recovery late in the day, Friday's strong day. That, how we ended last week bled into today's markets. Now, that being said, with Jerome Powell speaking tomorrow morning and yields going from negative to unchanged to slightly positive here as we get to midday, this rally's getting a little tenuous up at these levels, especially ahead of Jerome Powell, because I think Jerome Powell has to come out tomorrow and be hawkish, because any mid-range will be considered dovish. Obviously, dovish will be considered extremely dovish, but I think he's got to come out on the hawkish side because the data's telling him. And so tomorrow could get a little dicey, but so far so good today, up 0.6. It was up a little higher, but yields were also negative. So that's got the market. They're now positive. That should be a little bit dicey in the second half of the day.
Yeah, and this is coming off last Thursday when we hit the highest level in the 10 years since early November. So that's, lending support to the equity rally, the pullback that we've seen below 4%, but gaining strength.
One last thing real quick. 4% is a big number. Traders are human, and they see big numbers. That probably drew some buying into to the 10-year.
Right. Yeah. Buying into that and falling yields at 3.96% at this point right now in the 10-year. But we did mention that Apple news, stocks up over 3% today. Let's bring in Jenny Horn, markets correspondent here on the network, to help us break down this. It seems like Goldman Sachs positive. For the first time in 6 years, they've got a buy on this stock, Jenny.
Yeah, and a nice price target, too, implying about 32% upside from its closing price on Friday, about 29% upside from today, given that we are seeing a nice rally in Apple shares and a really optimistic no, all in all, from Goldman Sachs, really saying that Apple's valuation is attractive at these current levels and definitely more relative to its historical valuation and even its peers. And the analyst went on to say that the market should be paying more attention now to the company's installed user base and recurring revenue growth from its services and the Apple as a service opportunity, they said. They do believe the market's focus on slower product revenue growth masks the strength of the Apple ecosystem and associated revenue durability and visibility. But they noted the company's installed base growth, its secular growth in its services, and its new product innovation should more than offset some of these cyclical headwinds that have been weighing on Apple's overall visibility. Now, these headwinds, particularly on product revenue, has made Apple's valuation, like I said, more attractive in their opinion, noting the stock currently trades at about 24 times its 12-month earnings, which is below its 2020 and 2022 average of 27 times and last year's high of 32 times. They also think that services will account for the majority of Apple's gross profit growth over the next 5 years, highlighting there are now ample market share opportunities. And they went on to say this is the huge contributors to this are some of its growth in services, which is just something we talk about with Apple all of the time. Subscription services, I mean, you have Apple Care Plus now, Apple Music, there One Premiere. There's so many different services now that Apple offers that they see being a leader in terms of its growth going forward. Although I do have to say that iPhone is still its bread and butter. It still makes up well over 50% of its revenue. So iPhone is still the focus, and that seems to still be the point at which analysts do disagree over its iPhone growth long term.
Yeah, Jenny, remember we covered Apple Friday on Fast Market. 65.8% of their revenue comes from the iPhone. So no matter what you may think, this is still an iPhone company that's going to be driven by those sales. And, I love that analysts are calling Apple attractive, not in terms of the overall market,
just watching
but to its
see
history,
time and sales.
because
Fidelity's not filling me.
on its
Really annoying.
On its
People are getting filled
basis,
for 143.
It's not cheap by any stretch of the imagination, but the free cash flow, the amount of cash they have, the money that they return back to shareholders, it's pretty incredible.
I mean, it's overbought
and
many time frames, and it filled that gap. So
they keep bringing
I would be
more
buying it here.
products in-house. Jenny, this is a company that once you're in the ecosystem, it's the Roach Motel, Jen. You can get in, but you can't get out.
I completely agree, Kevin. And the genius thing they've done over the last several years is the way now there's all these different subscriptions you pay within Apple, and it's so easy that it's just like money out of my bank account at this point. I mean, I pay $14.99. I just got a charge the other day. I have no idea what it's even for, but I'm paying it. And I think that so many people are paying for that additional cloud storage, which isn't cheap. It can range from like $5 to $15+ per month. So that there is that degree of stickiness within Apple's services that I think is why they think that is a leading contributor to some consistency in their gross profit margins. But like you said, over 65% is still the iPhone, and there's been a lot of discussion over this upcoming quarter because we did see those delays dampen its previous quarter. If we'll finally see some correction in this current quarter, Apple has said that we could see some of these headwinds persist for the remainder of the year. So I don't think expect to see iPhone necessarily back to where it once was in the next quarter, but it's hard to not be optimistic over this game. It's up almost 20% this year. It's also been in a nice
says it's routing it through
rally this year.
FDLM on
For some
Fidelity.
reason, I feel like Apple's been under-discussed in the last several months.
Not by us, Jenny.
That's true.
This is basically the Apple Tesla show if you really want to break it down, Jen.
The names that matter, honestly. So Fast Market doing its job.
Right. And you did mention up 20% this year. Expectations starting to expand on this name. Thanks to Jenny Horn, markets correspondent here, helping us break down the news on Apple, leading to the upside. It's hard to
watch. You'll see some 143 prints go through.
Up over 3%. That's for sure.
There, 143, 1500.
Now let's bring in Sean Cruz, head trading strategist at TD Ameritrade. He's live from the NYSE with us today. Sean, welcome to the show. I just wanted to get your take here on the market action. We started rallying about Thursday afternoon. That's continued today.
More 143s.
Besides the small caps, what's your take here on the moves?
Yeah, I mean, I think it's really a matter of Boston.
What place in line am I here, Fidelity?
Quarter-point rate hike. There is a little bit of concern right now out of market participants that think the Fed might actually have to do a little bit more. I've heard 50 basis points popping up more and more here and there in some conversations. So I do think right now the market is grappling with how aggressive is the Fed going to have to get. We still have that terminal rate where things are supposed to peak out. That isn't really settled anywhere. The market hasn't converged on one area that is sort of this base case. We don't necessarily have a stable base case for how high rates can go. A week or two ago, it was right around 5, 5.25.
All right, I'm lowering my
5.25 to 5.5.
My order on my cash grid
and
puts.
Some people saying it potentially we could get a shock where it has to go even higher than that. So I think right now there's a little bit of a relief that maybe we're not going to have to go excessively higher above that 5.5% level with what we're hearing from Bostic. It'll be interesting to see how the market digests some of the data we get from the employment report later this week.
Yeah, and Kevin, to Sean's point here, it's all about jobs this week, and those numbers are going the wrong way than the Fed wants them to. Whether it's jobless claims, job openings, near records at this point. So that resilient job market is going to be in focus this week.
Yeah, how about the JOLTS number, Tom? A month ago it was 11 million. Remember, a shock on the upside. The expectations are for 10.6 million now. Based on what? Why is that number coming down? What in the employment data
not melting,
up
now
until
squeezing.
now has made you move 400,000 jobs on the downside. I don't see it. So that'll be interesting when that number comes out on Wednesday. We get that Wednesday right after the ADP. So we're going to get those two numbers on Wednesday,
GME's
jobless claims Thursday, payrolls on Friday.
Though.
Yeah, it's going to be a big weekend. Jerome Powell, he says he doesn't get these numbers prior, but he's going to have to explain them when they come out, and he's going to have to explain tomorrow the numbers we've gotten out in the last month. Remember, for the first time, that income and outlays number accelerated back up. It didn't just stop going down like it was. Those reignited. So I think he's going to have to talk about that tomorrow. It's just a matter of how hawkish is he willing to go.
Yeah. Hey, Sean, and to, the expanding on what Kevin's talking about here, the congressional testimony that Powell's doing tomorrow and Wednesday. I think it's the Senate first. Hopefully he'll get some soft or some hardball questions on this, Sean. But what's your take here? Does Powell have to be hawkish at this point because the data is supporting that terminal rate going maybe above that 5.4% that they're looking at right now?
Yeah, and I think the one thing to look at is how the data is coming in. We're seeing some progress. There's some analysts out there that point out that a lot of that progress we're seeing in inflation and prices is really just coming out of the energy complex moderating, coming down a little bit. That's what's driving a lot of that. But if you look elsewhere, there's still some relatively stubborn inflationary pressures sitting in the economy. I think Powell doesn't want to just cause an absolute meltdown, but I do think they don't want to come off so soft that everyone starts to raise the all clear flag and we get a big rally in risk assets. I think China, what we heard from China over the weekend, targeting that 5%, which everyone said, well, that must mean they're not going to be overly stimulative. That might actually be a little bit of a comfort.
I'm looking to sell some, or put an order out to sell some covered calls.
We're not going to have to try and tame inflation when China is trying to fire up their economy, which would be a massive driver of
if we get a little rally, it
a little bit of the news from China over the weekend might help a little bit, but you certainly don't want Powell to come off as, I'd say, too hawkish, because that could really inject some volatility in the market, and certainly wouldn't expect to see VIX hang below that 20 or 20 level if he does.
Oil trading over $80.
Yeah.
And oil's not going anywhere. How much can we do to keep oil down using supplies if China demand, if the stimulus that Sean's talking about starts to hit the Chinese economy and their demand picks up? What's going to happen to crude oil? What's that, when the dominoes start dropping, what does that do to overall inflation? Remember, a big part of the initial spike in inflation in the war in Ukraine was crude oil prices. Right. So that was a big part of the overall inflation picture. That was part of the story when it came down. Now crude oil's back at $80.
Yeah, that's going to be a concern moving forward because we had been trending lower throughout February. Now we're starting to bounce back up, above 80. But Kev, if you look at the terminal rate, what they've got set in there, interest rates are elevated. The housing market remains resilient. Home prices have come down a little bit, but they're still right near record levels. And the mortgage rate on the 30-year fix is double from what it was a year ago.
We could have a pre-earnings rally.
Does that make people just stop looking because they don't want to get
into
a new house
the last
at
couple
elevated
days.
Prices
the most I bought
and a higher monthly
today,
mortgage
but I bought
payment
quite a bit on
because
Friday.
now interest rates are double.
In
Thursday.
February, the 10-year yield went from
I
3.39
think we could,
on the first of the month
that's
to
a
3.99
pretty conservative price target for the little pre-earnings
last
rally.
day of the month. That
I guess
will
it's not that
take
conservative.
its
It's still
toll
like
on housing
24%
in
from
a
here.
quick manner. You saw it in mortgage apps.
If we're repeating anything, if there's any life left of
from housing,
GME being broken,
that's the easiest thing to connect the dots to.
any sort
now,
of
when do the lags start to come in? This move in
any sort of hope
rates,
for that.
it was quick. It was dramatic.
I'd say we have to have at least 24 before earnings.
It still
or
hasn't
after.
hurt
There's got to be
housing
some kind of
prices.
pump.
That's what's boggling my mind at this point. But let's take a quick break here, guys. When we come back, we're going to take a look at a name in that home builder sector. That's D.R. Horton. It got downgraded today along with KB Homes,
moving up here.
As rates are negatively affecting
the VWAP buy would have been great.
This
short back here would have been
right back.
Great also. Just paper trading in my head a little bit. Taking it slow. 143, 2,000 order. I'm not even getting a partial fill. Fidelity? Really? Tank into earnings. Maybe. Thanks. They better be quick on selling my calls in. Yeah, Miss 1940, that needs to break. For sure for upside. Or maybe it's just a nothing earnings again, like this one. A little drop and then a little rally, but just continues the trend. Chicken bones and a sacrifice. The Federal Reserve has said that further interest rate hikes will be required to restore price stability. Diamond says AI potential is staggering. Russian oil cuts not seen in market. Twitter is down for some. $143s are getting filled. Come on. Nothing. Almost back to the highs. Oh, this is your DD ace? Okay. Thought you were being serious. Good thing I didn't rush to go see this. That bigger. This DD that Juice shared is kind of interesting. Want to look through it. Oh, Kala, 34%, broke the high. Miss Jam, a little candle up to VWAP, SPY melting up. Tesla's not doing well, it's great. All those green candles.
Options and upgrades for reduced or no cost 27%. How about this? Reduced buyers' interest rate temporarily 26%. Reduce their interest rates permanently 24%. So home builders understand what's happening in the interest rate environment, and they're giving incentives to buy the same houses. So they understand that the overall market is softening. 65% of the homes that D.R. Horton sold in 2022 were less than 400
Might be getting a triple top here on SPY though if we don't break it.
That's actually a good number, because that tells me that that's a beginner home or a first-time home or your first upgrade, maybe around 400,000. So their price point is favorable. Doesn't mean they're not seeing people hesitate.
Yeah, I was surprised I didn't hear anything about Toll Brothers.
Yeah.
Their average selling price is nearly 900,000.
Yeah,
nearly 900,000.
That's
But
crazy.
Sean, implied volatility at or near 52-week lows in this name. We had earnings a few weeks ago. The stock spiked on that. Now we're back below those levels.
Powers.
How do you want to look at this from an example trade perspective?
Yeah, so one thing is, if you're looking at how this can break, think about where the big season for these companies is, where you really do start to get some, I think, some very insightful news on the housing market, which is that spring home building season where people come in, weather's nice, whatever it is. That's just
Thanks for your likes, guys. Appreciate it.
And people making these housing purchases or breaking ground in these new homes. So that could potentially be a big mover of the stock if things work out well, or if things really don't pan out and it breaks lower. I think you could really see the potential for a breakout away from these levels. So looking at targeting of where do you want to pick and choose where you're going to be and where you're going to set the duration on this trade, this is something that you can look at a time spread. We just had earnings a little over a month ago, so you might be threading the needle on that a little bit, but looking at that $90 price level, which is just below where the stock is starting to consolidate at right now, you could look at that as maybe an interesting price level. If there is additional follow-on selling or more analysts come out and start downgrading the stock, it could potentially push it lower, unless a lot of that's already priced in which case it could potentially just hang here. So selling the 90 put that expires this week, there's some elevated premium in there relative
it's good,
to where you're
DD.
seeing some of the other option series trade at.
I kind
selling
of
that 90
triple
put,
topping
now
here,
define your
maybe.
risk,
Maybe.
go out to that April 21st expiration, which, like I just said, is getting into that very busy spring home building season where you might see some headlines coming out, but not quite yet. But selling that 90 put, selling that 90 put up front and then buying that 90 put out on April 21st gives you time on this trade to potentially either just close the trade out, or you can continue to roll. Now, one thing worth noting here in these options is if you look at the weekly expirations, they have them every dollar. But if you look at the standard monthlies, they do go in $2.50 increments. So something
I think I have to have it
about.
flush
You might
below
wanna look
143
at
to
that
get filled.
92.5 in April, but there's really no 92.5 put that you could sell that again. And then if you go to some of the intermittent 91, 92, 93, 94 strikes, there might not be as much liquidity, not as much volume in there. So just looking at that 90 level where you have the potential for elevated volume as the strike you choose.
So this DD I might read is
I think maybe it might
spike.
drift a
Give
little
me
bit
that
higher. You
bread,
could do the
baby.
opposite on the call side. Just for this example, I looked at
Goes over the connection between
consolidation
BBY
here,
and other
implied
stocks.
volatility hanging somewhat elevated, or at least stable, and allowing you to just manage.
Just stop listening to him. For those who've been following along, I've been diving into BBY's connection to the volatility indices and my suspicion of manipulation through high-frequency trading and arbitrage. The bizarre price action shared by BBBY, Credit Suisse, and Silvergate on Friday led me down yet another rabbit hole that needs attention. There's going to be a long post. I have no idea how to properly structure it, so I apologize in advance. I kind of cruised through it a bit. And in the comments, it was like, where was it? Oh, maybe it wasn't this post. That was another one. It was showing the correlation between like Google and saying that's not anything special because Google has a high one. But maybe that was on a different post. Anyways, there's BBBY and the VIX relationship.
because I can't even hardly read these charts. I didn't open up any of the links before, but I just read it. Anyways, BBY flat lines for an hour, during which time market volatility fell off a cliff. Credit Suisse then flat lines, remains pinned all day. Credit Suisse stays almost exactly twice the price of BBBY. Silvergate remains 2 times the price of CS and 4 times the price of BBBY until close. Morning, Sarah. SPY's coming down, maybe back to BWAP. So this correlation with the Credit Suisse chart is interesting. Maybe it's just on shorter time frames because this doesn't look like it. Hey, Tommy. Yeah, it's kind of rejecting that. It's our 3rd rejection on that 407. So maybe that's the top. We looked for a short here. I just decided to create it in my mind. And then maybe another one here, which might be a good one down to VWAP again. But I still see maybe a move up to 408 today before Powell tomorrow at 10. Maybe this happens after hours and we get a gap up and open up here, or maybe it happens today. I mean, today it looks like a nice bull flag, so I think we still could see this today. This 403 or 408, 15 is a gap fill. 408.34 is kind of a resistance I have. But I think this part of the chart on SPY looks very similar to here. Like we're right here or here. So this might be next. After Powell, presumably. So I'm not seeing the Credit Suisse, like, not on the long term at all. This DD might be bunk. I think he's talking more like shorter time frames. Friday, we get news of Silvergate potential going under. As it turns out, Citadel and Credit Suisse are quite wrapped up in Silvergate. I want to quickly touch on the UVIX and Citadel's BBY's relationship. My first post, I highlighted a bunch of basket swaps that I found in January. Later found a few more very large swaps valued at 250 million, specifically a couple containing Intel executed in January. One, for instance, is January 6th, containing Intel, Microsoft, Amazon, Comcast, Google, valued at 250 million. I've long been suspect of coin having a role to play in our manipulation. You'll notice it appears in some of the above mentioned swaps even. So this is a much longer time frame. So this is BBBY and Credit Suisse. Credit Suisse being gold. I mean, it's not. It's just both 2 downturning stocks. Here it is in Silvergate. This one, I mean, this is the closest looking spot to me. Maybe some down here. So the silver, yeah. The Credit Suisse one doesn't look very familiar, honestly. No, this, I mean, that one, I don't see it. Not seeing him. Says it would appear that Silvergate front runs every single one of BY's runs. Else appear that in March. Yeah. I don't. Now that I'm looking at these pictures, I'm not liking this write up as much. It has interesting stuff though about the future, which could be true. very interesting observation I made regarding February 6th and its relationship to January 8th VIX expiry date. C 13 days from January 18th and C 35 days from January 4th. Got 120% run. This appears to be forced settlement. Okay, I'm not gonna read that one anymore.
Current quarter.
I read it last night and I thought it was kind of interesting.
A good quarter.
I don't like the pictures.
But I don't know that it's going to justify the relatively high stock price right now. And you know, one of the things that we like
Wall
to
Street,
look at
it's waiting on Powell, I'd say,
which
tomorrow.
Trends are supporting each company that we like to profile. So for them, you know, there's a lot of things that go into it, but there's three
like
that
Choco
we kind of
Taco.
looked at today. One was kids sporting demand, another camping gear demand, and then finally fishing gear demand. Now these are seasonal, so you know, I have to put that caveat in there. But when we look at the change from September of 6 months ago till now,
oh, I got a
there's
partial fill at
significant drop-off in
143s.
that. And even when you go on the year-over-year look, they're all around maybe flat or slightly down. So all the things that have been boosting this company have sort of started to slow down, and
throw it in
it's
the
showing in
Superstar.
demand. It's showing in the trends.
Partial
so
fill and then a little rally on BBBY.
As far as the back to school numbers that they put out last quarter,
broke out of the barcode
Q3
to a higher
report were very
barcode.
strong.
I have 144.5 now.
We're showing that it was plus 51%. Now it's down to plus
25 cents.
24%. So everything is slowing. So
grid for BBY,
you know, we're gonna
have
have a
25 cents.
slightly negative outlook on this, but it's mostly due to the fact that they have high expectations, and I think that they're expected to continue to grow.
No, I mean,
at a very strong
he was
pace.
pretty hawkish last one or two
showing
meetings we
us
heard
is
from
that
him.
that
That's when the
pace
market started
is
pumping.
slowing and maybe even flatlining a little bit, which investors are never going to be happy about. So this is not a like folio call where, you know, like, you know, we've had some in the past where we said this stock is about to get crushed. Not at all. I just think that the expectations are just a little too high.
That was maybe Powell. This was Bostic.
In tune for a
all of
reality
this
check on this call.
This maybe
just like a
he was
lot
pretty
of
hawkish.
retail, especially discretionary retail.
BBBY back to VWAP.
About inventories, questions about
I only
margins.
got a partial fill. How many did I get?
You read a lot of analysts. They're all.
I got 2,030 shares out of my 5,000.
Down from $12 down to closer to 11.5, 11.40 is what Citi did, I believe. Yeah, it was Citigroup. So I think the street analysts are seeing the same trail off in overall demand that you are, and like.
You could get a little 12:30, 1 o'clock bounce on Bed Bath.
Doing on their inventories,
get into some cover calls, I think.
That's what's plagued retail and apparel up until now. And they've got to show, like Walmart did, that they're getting through some of this inventory. Target did too.
So today didn't really, EU closing didn't really affect the market.
What are you hearing? Are you seeing anything about inventories? Any talk like that? Because your numbers show what these analysts are talking about, an overall decrease in the surge of demand for
right, and they did have a surge. I mean, it was incredible. Right. You know, that purchase intent chart that we showed was during COVID. It went through the roof. I mean, everybody was like, "Well, I'm going to get outside and do something." So that meant going to Dixon, you know, signing up for a league or whatever it might be, and buying things. And you know, on the inventory, anecdotally, I can say that I remember. Not that long ago during the supply chain, I was trying to pick up some basketballs. I coached my boys, and they had like 3 basketballs available. Now when I go, they're stock full. So, you know, I'm not sure where you want to be, but I don't think it's either extreme when it comes to inventory. You want to be healthy in the middle. So I do think that could be a problem if they did bank on this continued growth
on this candle
to be
now.
there for a long
145,
period of time.
the low
You
is
know, inventory takes a while to order and work through. So they could have a problem with
another 2,000 shares at
inventory
143.
The data that we're showing, and just like you talked about, all the analysts are saying if all the demand is slowing. So again, this is not doom and gloom for Dick's Sporting Goods. I think it's a great
there's
company
a little
long
bit
term.
more.
I just think the expectations are so high, they're not going to meet
see what
them.
these
If
cover
this
calls
stock
would.
was trading at $80 right now and had just sold off
146 now, BBBY.
I'd probably be more on the bullish side, saying, hey, it's not as bad as everyone thinks. But the fact that they are real close to one-year highs, and everything was growing at these really nice paces, and now we're seeing flat or even negative.
Lower rates are better from rates. Yeah, stock market likes lower rates for sure.
Not going to hit the expectations.
So this is the high of the barcode earlier.
Yeah, and your consumer, purchase intent and
those
little
double bottom
are
did
down.
actually play
You're
out.
starting to see that fall off in some of your metrics. Now, on the happiness level, Landon,
be good to break this
really
though, otherwise
have
we're
any
just
competitors
still kind
anymore.
of
They're
a
small
bit of a
with
bear
Hibbett
flag.
Sports, and that stock's down post earnings last week. But they don't really have any competitors. Does this help them? And then on top of that, everybody wants to do
Like in the inverted head
experiences
and
and
shoulders.
travel. Well, Dick's has a bunch of segments within their industry.
Coming down.
I
don't want to take a long even on VWAP here.
Whether it's camping, you mentioned fishing.
Pretty small
others.
range, but
So
this is
will
pretty
that
readable. This
kind of
this
allay
top and this
a lot of
top,
the fears
and this bottom
for
just
this
with the
stock going into this
decent
report.
VWAP.
I don't know that the experience thing is going to get them. I think that their bread and butter is going to be apparel and sports, and if a lot more people are going fishing, camping, that kind of thing, yeah, they got to buy some gear, but that's not a recurring purchase that I think you can count on from people. Whereas if you got kids sports, every season they change sizes. You got to go get the new shoes, the new clothes, get the latest and
Thanks
greatest
for your likes,
equipment.
guys. I appreciate
So
it.
I think that's
27.
really the more important
Not
angle. When it comes to happiness, they're sitting at like high 60s. You mentioned Hibbett, they're in the mid 50s.
Good for a Monday.
So they got about 10 points on them. I think they do have a very happy consumer base. I don't, generally speaking, when we look at
GME rejected that 1940 today, but
a lot of complaining about like
I'm hoping that's
cleanliness
not
or
it.
products
I
or
think
prices
we'll
or
maybe
anything like that.
bust
Maybe
through that
there's some
today or
inventory
tomorrow.
concerns from like a year ago, but generally speaking, they have happy customers, so I don't think that's going to be a problem for them. And they're outperforming the competition, which is, like you said, there's not a lot, but the one that I can come up with is Hibbett's, and they're about 57%, where Dick's is about 67%.
Earnings score on this one, Landon, real quick, ahead of earnings.
Sure, it takes into account the stock price on this one. It's negative 40, which is a little bit stronger than most. But again, this is not doom and gloom. It's just high expectations are going to be hard to meet, and we don't see it happening.
All right, great data as usual, Landon. Appreciate the rundown here at Dick's Sporting Goods.
All right, guys. Happy Monday.
All right, that's Landon Swan, co-founder of Lifefolio.
Happy Money Monday.
Break down that data. Not surprising with the stock running up over the last 10 months here, Kevin, that they're seeing some weakening in some of their sentiment numbers. But last
There's
quarter,
the VWAP bounce,
comparable
maybe.
sales up 6.5%. That actually outperformed what they expected at that point.
But
think we are they due maybe for some of those
high.
inventory issues, or that pull forward starting to lag now, where consumers maybe not going there?
And knowing the macro environment that they find themselves
This
in,
is kind of a
do
bull
they
flag
guide
it's setting up.
conservatively
Yeah.
through the rest
That's
of
a
the
concern.
year?
Super overbought, but
Hibbett Sports did that.
Yep,
still a
exactly.
gap up there.
So you have to take all this and where the stock is into account when you look at it, and that should
got some volume on that
guide some
VWAP
of the
break on
trades you
Bed
do.
Bath also.
Now, Landon talked about, in terms of a trade, Landon talked about where the stock is. And if you look at the expected move for this name, it's up over $9.50, which takes you up towards $142. Well, the 12-month high is not that. I mean, the 3-year high is 147.
That's all-time high, yeah.
Right. The 12-month high is about 138. So what I did, Tom, I went right to that 70 percentile on the short call vertical. I sold the 140, 145 call vertical. Now, Tom, this one, in terms of the call vertical, I sold for 125, 127, right around there. Now, you've got the on the screen there, that's the put calendar. I've also done the 125 put calendar for about 78 cents on that one. Tom, you can do the call vertical. That's right at that 70 percentile. You can sell that for about 125, 130. You can buy the 125 put calendar and the March 10th, March 17th, or you can combine the two into one trade, Tom. And that trades for about, if you look at them both, about 27 and 27 is about
I like the inversion on
credit
BBBY
on
to
that
GME
trade.
or to SPY.
Therefore, if nothing happens,
BBY
you've got the
Moan's
credit,
saying,
the net credit on those two trades.
It's happening.
Let's look at the calendar that we've got up there first, Kevin. Buying
It's glorious.
March 17th monthly 125 puts, selling the near-term March 10th weekly 125 put, paying roughly about an 80-cent debit on that. That's your risk, $80 per
Professional,
spread,
my unprofessional opinion
on it. But you've got a nice wide range of probably
I'm thinking
about
this might be the low today.
138 on the upside and about 115,
142.
116 on the downside.
I'd like
for
that
this
inverted
thing
head and shoulders to hold.
profitable. You're taking
That's kind
advantage of that divergence.
kind of the
in
lowest
implied
low we can have
volatilities
for that to hold.
buying, which is
Upside,
than
I
what
think
you're
we could
selling on that
see.
one.
Maybe we could
And
see a
then
test of
also
2.
on the neutral to bearish type of side, selling the call vertical here,
that might be too
and
aggressive,
using
actually.
that 70% probability that the short 140 call will be out of the money at expiration. You're selling that 140 strike call, buying the 145.
Maybe
correct?
$176.
$5 wide, trade about 130.
Yeah, 130. So that means you
But
got
so far in this range,
$370
143
in
to
risk
today's
on
high,
that. But as you mentioned,
162.5.
you've got that big cushion
Around
to
there,
the
but
upside.
might make a high back to
option markets pricing in
176.
a 1 standard deviation move of about $10.
Just some more consolidation and flipping of the momentum from down to up, which takes time of up and down in a range.
That they may guide conservatively like Hibbett did.
Yeah, and the difference between the two trades, because they're both kind of bearish, right?
Yes.
But you need
we got that engulfing candle still.
to go
Have
down
inverted head and
towards
shoulders. This is
125. But on
after all the gap
calendar
fills,
that's out of
so
the
we filled
money,
the gap.
stock can still go
So
up to 139,
everything
140,
looks good
and
still.
you can still remain profitable on that. You do have
These
some
catalysts
assignment
could
risk on your
set
short
any of
options
this-
on both of these
any of this
example
off.
trades, but both the
But
call calendar
back below
expires
VWAP. Now I'm
in
able to use
4
this as
days,
support.
also. So
A
we can look
high
at two
of
different ways to play
144.
this based on maybe you want a cushion,
My
and
barcode
then
now.
Kevin just had the combination
that
of both of them. If you're
and
kind of uber bearish, like
high
Julio's data
146
might have been,
and low
minus
144.
The short call vertical is one trade. The long put calendar is another. Or
Why did
combine
Linux
them to
flip
make a more
bearish again?
complex trade.
Right. All right, great look.
You got
at,
2 and a
those
quarter.
example trades in Dick's Sporting Goods. Let's take a quick
Not
break
bad.
here, and then we're going to take a look at Meta Platforms, which has rallied over 55% so far in 2023. Fast markets coming right back.
No way. I mean, he's playing with like a large amount of weeklies, so he's got to have his move happen basically as soon as he opens it. I don't know what his strikes are, but it not breaking that 1940, like if it doesn't actually break that, that's not good for the long side for a rally into earnings. It just wicked above it today, so well, yeah, we might get that's pretty historical. We get a dump or rally into earnings, so you know, here's a 3-day dump into earnings. Here's a month-long dump into earnings. Here's a 2-day rally into earnings, and then a 3-day dump, but really this is a rally, I'd say, overall. And here's a dump into earnings. So there's reason for it. Dump into earnings. No, it's actually had a little pump, but in the overall trend of a down. I know. I feel like this happens often lately with GME. They don't announce until way late. All right, GME broke down through VWAP. I got more bullish on GME once it didn't kind of flush these days. Like this day held up good, which I was surprised on. It's below the 50 or below that support, that 1940, below all those levels, and it hammered, which is bullish. And then we basically had a bounce since then. It's been small still, but yeah. Buy a little lower to VWAP. Or buy here if you want to catch the bounce. Thinking about it.
trying to come to grips with a higher rate environment. And I think you pointed out, again, small caps a little bit of an
This
outlier.
morning was
They're
looking
actually
pretty
down
promising
by about
too, so
0.75%,
hoping that
with the
still
TNX
starts to
hanging out around 396. You've got
produce
the dollar,
itself.
which is
That price
coming
action
off
we
a
got on
bit
GME
here
this
to
morning.
104.22.
I'm not going to give up on it. I'll give it at least till tomorrow.
For longer environment that we're dealing with.
If we don't break
as I mentioned,
1940
investors
by
are coming to
end of day
grips
tomorrow,
with
I
in
probably
terms
should
of what
close
it
out
means
too.
for the longer term, price in terms of some of these indices is, well, it's not just here in the U.S., right? I mean, ECB member this morning, Holzman, was talking about how he expects or would like to see 4 50 basis point rate hikes at the next upcoming meeting.
That might be too
so
soon, though.
50
We'll see.
basis point rate hikes at the consecutive next 4 meetings ultimately. And so again, I think the bid we're seeing today, continuation of the bid that we saw Friday, the big run up into the end of the week, but interesting to see the Russell not completely buying into this.
Yeah, and we've got oil back
breaking
above
through
80 bucks
VWAP.
a barrel here, Ben, for the first time in nearly a month. There goes those inflationary pressures easing, right?
Yeah, it seems to be, right? Prices at the pump also inching up ever so slightly from last week. I saw they were at 336. The national average, AAA reporting last week, and this week it's now up to 340. And you mentioned the WTI up to 80.50.
Okay, SPY's
so
flushed through that
$8
support.
level. That's going to raise some eyebrows. I saw the
What
Brent
the
up
heck
to
did I just open?
86.35, and it was just last week, Monday, we were talking about.
I think I just got some more cash free puts in
China, those
BBBY.
PMI
Yeah, I
numbers,
did.
right? Remember the
All right.
manufacturing data that came in.
Got
really
my
strong.
fill.
Well, this morning there was a lot of concern
BBBY
about China and that growth forecast.
flashed to
of
143.
5%. Because it was
SPY's
a
really
mix
dropping here
versus
now.
what analysts were looking for, around 5.5%.
So triple top ended up playing out.
5.25%, I think more were suggesting. But ultimately, I think when you look at it, and traders coming to grips with the fact that 5% is still pretty good, right? It still means that we'll see demand out of China, part of the reopening trade that we've been expecting to see come into play. So, yeah, with the dollar lower, as I mentioned, down to the 104.22, I'm not surprised to see crude oil getting a little bit of a lift to begin the week.
All right. Thanks to Ben Lichtenstein, Senior Futures Contributor, breaking down equity markets and crude oil. But now let's bring in George Tillis, Senior Markets Correspondent here on the network. George, we're talking Meta Platforms. This stock's up 56% so far in 2023. I mean, the 4 or 5 month rally that we've seen in the shares, pretty substantial off of those 52-week lows. What's your take here on Meta and the rally we've seen?
Well, I think the fundamentals are really the backbone for Meta Platforms. I mean, this was something we talked about prior to the earnings last quarter, which it published on February 1st. I mean, overall, there was a lot of aspects behind its business on whether it was really a value
pretty big red on there
stock or
on
sort of a
SPY.
value trap, and it looks like obviously the market is declared it really an
BBBY might
undervalued
inverse.
stock as it continues to move to the upside. I think some of the elements behind this potential ban on TikTok is presenting a short-term catalyst for the stock, but nonetheless, I mean, if you look at the last 2 quarters, going back to October of last year, but also February of this year, both the quarters demonstrated the company's growth rate still under contraction when it comes down to sales growth. Last quarter sales were down 5%, earnings
Yeah,
were down
I
about
think it's on
49%.
purpose. They wait
But I think what it
to
really
announce.
comes down to is the company's still very profitable.
I mean,
Its
that's
net
when
income margin
Ryan Cohen
around
kind of flipped the
24%
script
is
on
below its
the
5-year
cycles and
average.
announced
But one of the things
earnings,
I
and
did
it was
notice
way.
last
It
quarter,
was like a week. It was
prior
like
to
2
the
weeks
announcement,
earlier
I think
than
I spoke about it, was
expectations.
really the underwhelming elements
That
behind
was
its
this one.
estimates
And that's
in
when he
terms of
also
the
bought.
TPS.
So
It actually missed the estimates quite
maybe
a
he's
bit.
gonna say it's way
but the
later
stock
now. I
took
don't know.
off because they denoted in their conference call growth in monthly active users, but also daily active users by about 4%.
There's a window
But
they
at
have
the
to do
same
it in,
time,
but
the company did
I
publish
think you've got
an
maybe
announcement
30
when they
days or so.
declared a cutback not only in total operating expenses for the fiscal year 23, but also more importantly than not, is cut back in R&D expenses. The company had expected to have about $36 billion in R&D expenses. That's been cut down about 32 at the midpoint. And a lot of that is now going into generative AI versus the metaverse. And if you look at the metaverse spending last year, it was about $13.5 billion. And one could say maybe that was just money not well spent, but at the same time, Zuckerberg and company gave Wall Street really what they wanted, which is a cutback in expenses, but at the same time, generating, again, free cash flows, which were expected to be only about $160 million last quarter. They're improving, and that's a good start for the company. I think the stock really reflects
SPY.
that.
George, they
405.
punished this company last year when they
So
thought
see if it finds
Mark Zuckerberg was
support
tone
here.
deaf to the overall
Pretty
problems
big sell-off
and
though
continued
there.
to spend money. But they did have some good news. last year, even though the stock sold off. Their engagement over the 4 quarters of last year, it was still up every quarter. 2.96 billion over all their 4 apps, over 2 billion in just Facebook alone. This platform, their 4 apps still remains extremely relevant. Now
I was like what I was seeing this morning on GME.
Remember, we actually
That's just a little precursor.
Mark Zuckerberg used the term efficiency in his last conference call. They seem to have got
volume
his,
spike.
His attention, George.
Noise.
Now he's doing all the right things, cutting head costs, cutting expenses. The stock's reacting. Is this just more to come here?
I think so. I mean, it's not going to recover all of the losses from the last 3 years anytime, I think, this year or maybe even next year. But I think the trend speaks for itself. I mean, basically from a technical standpoint, first, there's 2 gap and continuations or gap and goes. And these are, again, based on the last 2 quarters of earnings. I think the elements behind TikTok
I've got 40 weekly cash good puts so far.
TikTok competes directly with
the
Facebook
1.5 strike
or
on
Meta
BBBY.
platforms across their 4 different platforms, because
Might get more.
TikTok to me is more of an entertainment platform versus
Last
a
week,
social
I think I had
connections platform.
like
but
100.
they do compete with Facebook in terms of the
But I
time
did get
people
more shares,
allocate
so.
on social media, because again, there's only so much time in the day that people spend online. But I think one of the challenges for Meta platforms
I
really
just
was
lost
not
my profits on
necessarily
it.
profitability, but it was profit growth.
And it literally whipped down and stopped me out right here.
Cutting back expenses, both in headcount,
Looks like it's coming back down.
starting to narrow down.
I'm still bullish on it. I
Now,
think these prices are still good. So
laying off additional workers.
I'll go heavier earlier.
In addition to
Last
like
time I just started scaling in here real light.
Creative to a company,
And
which
then
is still, like I said, very profitable.
I wasn't sure how big of a
It
position
just
I
ran
wanted,
into some
so
profit growth challenges because of the
as it started to move up, though, I kept adding
elements
and adding and
behind
adding until my cost
the
basis was like
cutback
here.
in spending from an ad standpoint, but
if
also
we find support
endogenous
around here and
because
start to
of the,
reverse,
perhaps
I'll go a little heavier
malinvestment,
initially,
one
and
would
then
say, or some would say,
maybe as we
in the
rally.
metaverse, which is
I don't know.
not
It's hard to know when to
necessarily
take
accretive
profits
to
on
the
this.
business
It's
right
like
now.
Yeah, and they've lowered the price on a couple of their headsets
it's
a
still
year
cheap, I
after,
think.
less than a year after they raised the prices, so maybe demand not there for the old metaverse. All right, thanks to George Tiller, Senior Markets Correspondent here, helping us break down the backdrop here in Meta platforms. But Kev, just your quick take here. Shares are down only 5% from year-ago levels, but as I mentioned, up over 55%. Digital ad spend, will it come back? TikTok. If they ban TikTok, that opens up a bunch of ad dollars.
Well, Reels is what, remember, they're short little movies. That should benefit if TikTok runs into any regulatory issues or stoppages. So, yeah, I think that's pretty significant.
It is volatile. I know it's
because
strange. Yeah, it's really just like
they're having trouble
sometimes just
monetizing
volatility from
Reels.
traders. I feel
It
like just
doesn't monetize
straight
at the
trading
same level as
volatility,
Facebook
not like
and Instagram, where you
not
can
from news
shop
or anything
off
fundamental, just
off of some of those
traders
platforms.
on it.
So they've got their
But it's
problems.
been
The head
relatively
count, I think,
stable
is important
for a few months
that's
now,
still trimming.
since
And
December.
just an
It's been a
overall,
downtrend, like
I think
not
the
necessarily volatile,
tone
just selling
and the
off.
sentiment has changed
Now it's
about
finally
this
kind of hit a
company
bottom.
because Mark Zuckerberg
Now we're going to start to
has
see
changed his
some
tone and
volatility,
sentiment
like
about
we
the
did up
company. He's
here
now
at
focusing on
highs.
expenses.
Big
I think
dips,
that's a
big
big
rips.
deal for them.
I
Ad
think
spending
we're seeing that.
is
Here's big dip, here's
key
big rip.
for their success.
Now it's dipping again.
91%
Setting up maybe
of their
like
revenue
inverted
comes
head and
from
shoulders here
digital ad
too.
spending.
So that's why I'd like to go
crucial.
long here.
Yep. So
kind of these levels.
RSI on a technical basis,
it'll
George
have-
mentioned that. We
it'll
just
have
had a
some move
golden
up.
cross 50-day went above the 200-day. That's positive on the technical side.
But I mean, the candles back here in the
RSI
ranges were
near
huge.
70 level at this point,
Haven't had
Kev.
in a while.
And after this
You know, these
massive
were
run up,
big
maybe come
percent
up
moves
with
just in
this
a week or a few
example
days.
trade here, where maybe
25%,
maybe
yeah,
gains
that's
or
crazy.
maybe it starts to consolidate here.
This was a nice short
at these
here, just
levels.
long.
So I
It's
looked
kinda
at a call vertical out in the
still
March
pretty good.
31st
This is a nice
weekly
long, but
series. So 25 days till
depends
expiration.
on how much you want to trade it.
Selling the out of the money 195 strike call, buying the 200 strike call. So a short $5 wide, neutral to bearish call.
Yeah, he did it. He maybe
You're
screwed him with
collecting
it. I'm not
roughly.
sure.
We've got $1.65 credit on that. The stock has moved down a little bit. It's close.
Thanks for your
trading
likes,
closer
guys.
to
We got
150,
30 of
but
them.
For
Well
this example,
done.
use 165.
Not bad for
that means
Monday.
you've got $3.35 in risk, or $335 per spread. But that cushion to the upside, Kev, to that break even of 196.65 is what you look at on this type of trade.
Yeah, exactly. And you don't need
BBBY
the stock
doing the
to
big
go down
barcode
for
now.
this to be profitable. Remember, you're selling it out of the money,
143,
high probability call
145.
vertical that's risk defined, that's collecting theoretical theta. Now, it's It's about a couple weeks out, so the theta hasn't really kicked in yet. That'll
A little
increase
bear
as you
flaggy
get
here, though,
closer
which
to expiration.
not a fan
but
of.
This is
I don't like it.
a trade that looks at the move, and just from now till March 31st says it's not going to go over, let's say, 196.5.
Yeah, and if you look at just about a month ago on a chart, the stock failed at that right near that 195 level. So
also.
you look at it on technical basis, trying to figure out if you're neutral to bearish on a name. You start looking at the technicals. Those are some levels that you can focus on. And I mentioned the fact that the RSI, anytime it gets above
Gunshot today.
70,
I should have taken
it's
this
considered
short.
overbought, but we all know that those stocks can stay overbought or oversold a lot longer than you'd maybe expect them to, but they're good gauges to kind of just follow. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up next.
Next Gen. U.S. banks are finally being forced to raise rates on deposits. Yeah, so it looks like it's probably going to flush some more. Seems late, but I might even take a short here on that bear flag. That gap fill. NVIDIA, let's see. NVIDIA will be working with other server makers as China Inspur has been put on export control. JetBlue Spirit Dale faces DOJ antitrust suit as soon as Tuesday. FBI offers $50,000 reward for 4 Americans kidnapped in Mexico. Ace. Citadel has said we're deeply concerned that SEC has simultaneously issued multiple far-reaching proposals that would dramatically overhaul current market structure without adequately assessing the cumulative impact on the market or the potential for unintended. Hear that? That's maybe good news what SEC is doing then. Citadel is deeply concerned about their proposals. U.S. opens probe into 2022 Zook self-certification of robotaxi. Amazon. That's interesting about Citadel not liking what the SEC is going to maybe do. Maybe not a bear flag. It might be bounce on that support. Mike Wilson of Morgan Stanley says equity markets survived a crucial test of support last week that suggests this bear market rally is not ready to end just yet. Mixed with a lot of Bostic. Turka. What's that you writing in Chinese? Turka's holding up really well. We talked about it on Friday. Holding up a nice level into Friday would probably be a good sign for this week, and sure enough, here we are. That said, it did fill that gap. I mean, it's getting lofty now. If you have some profits, I mean, I would be taking profits at these levels, at least for a pullback. So to go long here, it'd have to be very short-term scalp. I like profit taking at that level for sure. I was looking for that gap fill. We were talking about it last week. The gap fill of like 65 right here, which now filled, and you've already moved past it to this resistance back here. Not quite. Yeah. Just starting to play with fire if you go long after it's had this kind of move. Not to say you can't have another move higher, but again, probably some retracement. Where you might ask, but support and resistances, or they'll fib. Some of these line up right with the fib, like this high right here. Oh, never mind. SPY is actually bear flagging still. GME's coming down. Morning hype. They didn't throw me into something I didn't want. I don't know. This looked good. Maybe it was just a test of that 1940 resistance, and it's not a push. I got a little inverted head and shoulders maybe setting up here too. Yeah, I heard Linux did that. I mean, he's getting tons of weekly contracts, so he has to basically make the decision within a few hours. If it doesn't start moving like same day, he's got to get out. So this was probably, I mean, I don't know what he gets his data from, but seeing this and then it reject 1940 is not very promising. And the SPY kind of coming down too. So that could change tomorrow with Powell, I think, but I mean, it still looks pretty good to me. Like, we didn't get the 15-16 range I wanted, but this looks like it could be the bottom. And I'm hopeful for thinking maybe a pre-earnings rally. But that's just maybe futile. I don't know. Hey, Mohammed. Yeah, he had a lot. So yeah, you got to make quick decisions if you wants to hold those or get rid of them. You can't just let that kind of position decay. What do you think about it? I went long on it some more today. I think these are good prices on it. Yeah, I think it could 10x from here within the year. So I like that. I like that return. And yeah, there is a risk for sure. Bear flag about to break to the downside. I believe. Yeah, I'm gonna take it here. Oh, never mind. Oh, buying power. Yeah. Should have traded to close the nat gas. So we're talking about merger news today.
Time for some BBQ. Based on what? Merger Monday? Just the saying, the phrase. I'm thinking Happy Money Monday. Thanks for your likes, guys. I appreciate it. We're at 31, not too bad. 31 thumbs ups. Guess I could go micro. Oh, getting a little bounce though. Let's see. Okay, I did micros. I shorted 4 micros here. Seems like a low, but I don't know. Bear flag below VWAP. Got right under the 9. Got everything. Just a support that's hanging up. Nice bull flag. This little one. When it retraces all the way back to the bottom of the flag, I don't like it as a flag. I see this bigger intraday bull flag or bear, unfortunately. So would like to see a hold up here and then a break of this level from today that we set. 146, like a break above that. To really solidify this inverted head and shoulders. Big ears better than big mouth. Big thumbs up better than no thumb.
Outperform rating. The analyst said the company's upcoming Analyst Day should feature updates on its Veranova separation, which is slated to be spun off of GE in early 2024. They added that with GE having been released from deal purgatory, shares are among the sector's best performers so far in 2023. Now, this analyst and investor event will occur on March 9th at their headquarters in Cincinnati, Ohio, and investors will really want to hear about numerous things in its business, but one of which I read as an overarching theme from the analysts is really its power generation business, which is yet to break even. The renewables business also reported a 2022 operating loss of about $2.2 billion on $13 billion in sales. So any welcome on how that segment is recovering, as well as the cost efforts they're helping to take to mitigate these losses, will be welcomed by investors and analysts. B of A also did maintain a buy rating on shares today with a $96 price target. So some optimism today, all in all, from the street on a name that we don't discuss very often, Alex.
Yeah, I'm going to say downvote, but I think that's a really fun one to talk about because it's almost a cautionary tale to not get complacent in the role that you play in the marketplace.
At the low there.
At one point was the untouchable. It was the Apple, if you will. It was the mega cap. 20, 25 years ago, this is a 500 and some billion dollar market cap company. It's about 20% of that now, just under $100 billion. So when you look at that and you think about what are the things that are holding back a company like GE and what are their plans going forward, well, their plan is we've got so many different unrelated businesses. Let's just split these off into 3 more specific silos and allow investors to kind of find their investment into each one of those as they want. Well, what is the growth story of a company like Apple or a growth story of a company like Microsoft or Alphabet? It's getting that web into more and more things. And so at some point down the line, becoming this giant conglomerate can actually work against you. I think GE is a cautionary tale of that, but I'm going to go ahead and say downvote for GE. Seems like a story
There's a bit of a flush on SPY.
It does, and I kind of put IBM also in that bucket. The stocks of the technology of yesteryear, although still opportunity in some of these names, and GE still showing that its performance, at least on a year-to-date basis, has been relatively relatively strong. Now, dwarfing the performance of Tesla,
gas
which is our
actually
next
flushed
name
it a
today,
low.
which is up almost 60% this year, up a whopping 91% from its yearly low, and still holding above its 50-day moving average here. And they are reducing now the
Yeah, I think
prices of their
maybe a
more
little gap
expensive
fills on the
models
table.
yet again. The Model S will start at just shy of 90,000.
Oh, we get a little bit more of a
This is down
bounce today
5%, and
for
X
Powell, but
will be down about 9%, just
guess
shy
not.
of 100,000
I was looking for
in the
408
United
to
States
go
per
short.
Tesla's website. The
It didn't
company
wait.
lowered the higher performance plaid
Back to
versions of each
17.
vehicle by about 4 and 8%
Maybe.
respectively, and at 100, just shy of 110,000, the
Yeah, I mean,
plaid
if SPY is
iteration of the S
selling
and
off and
X
GME doesn't show
now
relative
costs
strength.
about 26 and
Looking good.
29,000 less than they did in early January, which I think really paints a picture of the price trimming we've seen over the last several months. Now, Elon Musk did say last week that a desire to own Teslas was indistinguishable from infinite, and that demand will go crazy as the company makes its cars more affordable. So reducing the prices of the
Price
S and
action
X
this morning on
models
GME
again
had me
suggests
pretty
that these vehicles
bullish.
may have gotten
The
less of a
volume
boost
picking
from
up,
the previous cuts from their lineup 7
rally,
weeks ago that now they're looking to further reduce.
spike
But
through that
nonetheless,
1940, but
Elon Musk said that they found
been
that even
subdued
small
now.
changes in the price have had a very big effect on demand. So for that reason, we are seeing these now offer a little bit more affordability. All in all, I mean, $90,000, $100,000 cars, these are still high end. It's not like they are massive price reductions, but definitely focused on being more affordable to its consumers, which I think is really seen as a positive. And of course, applying for that tax credit has also been top of mind for Tesla, which these vehicles clearly do. So surprised we're seeing shares lower today, but Alex, Tesla trades honestly with a mind of its own. So I would say for that reason, not unusual.
Okay, I'm back.
Home builders may go by the wayside here for the next quarter or two due to the rapid increase in mortgage rates here for the last month.
got
It's
stopped
actually
out.
increased by about 70 basis points here. So they do believe that this market may cool off. They actually downgraded D.R. Horton to neutral from overweight with a new price target of $102.50.
Yeah, we'll see. We'll
That's
see
down
on.
from $107. And once again,
Looks
they're
like
still
SPY's
remaining
gonna come down
positive
further.
on home builders throughout 2023, but we just may see a little bit
Nice
of a
big
shift as we
barcodes.
see this rapid
43,
increase in mortgage
144.
rates over the last month and a half here. And for KB Homes, they actually did a double downgrade. They downgraded the stock to underweight from overweight, and they also have a new price target of $32.50. That's down from $36 here, Alex. But once again, relatively strong performance when it comes to the home builders, especially in a rate environment where mortgage rates were 3.25% over a year ago, and now they're pretty much have doubled at this point in time.
Yeah, and I'm looking at these stocks, in particular KBH and DHI, and then I just flipped over to 30-year bond futures. You could use the 10-year note futures as well on the Treasury front, and it's not a perfect shape correlation here. It's pretty darn close, and it just shows that sensitivity. That optimism, I guess if you want to call it, let's just call it a change in tone that happened towards the end of last year, as there was this feeling that interest rates had maybe peaked, inflation had maybe peaked, the Fed was going to capitulate a little bit, you saw interest rates ease, led to a little bit of a comeback in a couple of these names, but the last month has been a very different tune, particularly in regards to where the Fed may ultimately stop, and so who knows what's ultimately going to happen here, Kev, but I mean, there's a reality where we see double-digit mortgage rates in the future.
That could be possible here, Alex. I think that would be a very significant market mover if we saw double-digit mortgage rates, especially for a sustainable amount of time here. But what I can say is if you look at the Fed Fund futures going out for later this year, it is actually, as of today, pricing in 5.5% for the Fed funds. So that is also indicating that the Fed is obviously going to have to do more, but doing a little bit more than what their previous target was, which was around 5.25% to 5.4%, around in that area when it comes to the range here. So yeah, very interesting. And then all of these home builders, they all are different in their own rights when it comes to geographic locations as well as their average selling price. If you look at these two names, their average selling price is between $490,000 and $510,000. So it would be at the lower end compared to maybe a Toll Brothers where their average selling price is a little less than $1 million. So all of them actually have consumers that might be impacted a little bit differently when it comes to home purchases, and that's why JP Morgan as well as some other analysts are really trying to pick and choose when it comes to who could actually outperform in this marketplace in this type of environment. And right now it does appear that those lower selling homes as far as average price, those clients or those consumers might be a little bit more impacted by interest rate fluctuations than say a higher end consumer that's maybe spending $1 million or $1.5 million on a home.
Jeez,
Well
AMC
said,
did
and obviously
got rocked.
these names pretty sensitive to interest rates,
Rallying
but
this
real
morning, just
estate in
completely
itself,
giving back
of course,
up.
super sensitive to interest rates.
Nat
Just
gas
a
moving up to
slower moving
VWAP.
asset class in terms of the price volatility is just. You can't trade it as fast as you can trade a stock share. So we'll be watching these names. We'll be watching real estate prices. Of course, we'll be watching interest rates. But always a pleasure. JP Morgan downgrading and double downgrading a couple of the home builders. Kevin Green, thanks for joining us. Bring back in Jenny. It's time for FOMO. Going back to the car space here, looking at Ferrari. So we're now going from Tesla, which is trying to make more affordable cars, reach more, to one of the most exclusive car brands on the planet in terms of price tags here in Ferrari.
And okay, so I have some major flaws within this report, but I will go through what the analyst from Morgan Stanley thinks. They are replacing Tesla with
getting
Ferrari
a bit of bounce
as
here
their
without the
top
SPY
pick in the
sell.
automotive sector, saying that they see Ferrari as the most defensive name in their coverage that avoids much of this EV risk and EV hype, giving Ferrari then an attractive risk and reward. So to me, that basically says that you are not a proponent of this EV shift in adoption we are seeing, because they want to then then avoid all of the hype around it, which is an interesting take. But they said it is increasingly cautious on the auto sector due to year-to-date rebounds and equity levels, as well as indications of unaffordability and credit pressure, but believes Ferrari is best placed in the space amid macro and geopolitical uncertainties, saying that in addition to Ferrari's strong fundamentals, they believe it has levers to pull for both growth or downside protection within a wide dispersion of macro outcomes.
But now, all my calls about today are flat or down.
Vehicles will also
19's a break even.
Predictable business model and near unmatched brand and market moat. They said the shift from internal combustion engines to EV shouldn't concern investors because Ferrari engines are only partially behind the success of their brand,
15-20%
which is one of the
day on
most
GME.
valuable in the world in their opinion. They do have an overweight rating on the shares and raised their price target to $310 a share from $280, implying quite a deal of upside from current levels, just shy of $272 per share. But I think, Alex, my biggest flaw of this entire report was the fact that they mentioned indications of unaffordability in the broader auto space,
a little bit,
and then named Ferrari a top pick. I mean, these vehicles are starting. We checked this morning because we were all discussing this brand that is not necessarily one that you know a ton of owners of Ferraris,
nice.
starting at $220,000 per vehicle.
I think it's a good point, except for the fact that this is so expensive of a product that you're looking at a consumer that, yeah, they're impacted by the economic cycle, but they're impacted a lot differently. If you're going to go buy a Ferrari, I hope this isn't a significant portion of your capital. And so you're probably someone who's fairly secure financially, to say it one way. But also, I think it's
on that wick, I
too,
bet, and then here we are making new lows.
Sustainability
should have taken the
person who buys a
short
Ferrari,
here, maybe.
probably on the showboaty, selfish kind of side. Are they that concerned? I mean, maybe they donate things another way. So you look at this, Jenny, I just don't know it's the same consumer. So I hear your point. If a Jeep Grand Cherokee gets a little bit more expensive, it's going to really impact those who are in that marketplace. But if a Ferrari gets more expensive,
I guess not. I just bought calls. I don't really care, I guess.
And you got this fancy car, might actually even make you want to buy it more.
Yeah, and you make a really good point that it's a completely different market for the Ferrari market.
A lot of it, I guess,
the
are
luxury
leaks,
market
so
in terms of retail.
doesn't
There's
matter a whole
different
lot.
levels within that luxury market, and some are outlandish, some are
Urge is up
more
4%.
reasonable, but still high end. Ferrari to me is the highest of the high end of the vehicles. I'm not a car person, so I just know that it's a very hefty price tag, and I think perhaps maybe the disservice to the analysts is the way that they are replacing then Tesla with Ferrari. Then I naturally make the comparison, even though there isn't really a comparison with these two companies. They are so different. Ferrari is an established, a foreign brand. Tesla is much newer and much more focused on the technology of its vehicles. So difficult to compare. I see the point, and I thought this was a fun conversation to have for FOMO, but I think just given the fact that we have seen some interest in Ferrari as of late, we have seen an uptick in its trading volume and slightly higher on the day, that the FOMO feeling, at least following this analyst sentiment, is to the upside.
Yeah, no doubt. And obviously the comparisons to a name like Tesla are natural, right? But we talk about all the time, Tesla's that one auto company that is sort of priced for other reasons as well, that it's going to make breakthroughs, that it's going to make some major impact on the world in some possible way, because the fundamental story just doesn't add up to the valuation. Well, Ferrari doesn't have that same story associated with it. It's a really expensive product that has a long-standing history and tends to be a little bit more defensive, to use the words from the analyst at Morgan Stanley. But I totally agree with you that the FOMO, at least today, is to the upside. Definitely at Morgan Stanley, as they make it their top pick in U.S. auto. So I wanted to look at something that was bullish for the trade illustration in case you subscribe to the belief in the logic that's being laid out from Morgan Stanley's analyst Adam Jonas. But race is the ticker, buying a call calendar to the upside. The high in this most recent move was up to just shy of 280. And so I wanted to look at something that would benefit from a run at that high and maybe setting a new one near 280. And so giving it some time for that to happen, I looked at the April-May. For the first time, I believe, on the show in 2023, we're looking at May options for a trade illustration, just to show how fast this year is already going. But pretty long-term trade calendar for the type of trade illustrations that we look at on a regular basis. Say you were able to do this for a $3 debit. that would make the total risk $300. I think it trades a little bit more than that, but for the sake of the conversation, it's always a little bit easier to use the round numbers there for the prices. And so you can see the risk profile looks more like a mountaintop. Apex of the profitability is at that strike, but because it's a little bit longer term, because the prices are starting to get a little bit more expensive, you can see that it's an area. It's getting near 280. If this got back to 278.78, which is that high of the last, this last move to the upside, well, that would probably be a point that this one's doing okay as well. But typically a slower moving type of a trade. It's risk defined, of course, takes risk in both directions. If this one just doubled all of a sudden, was like, $400, $500 out of nowhere, probably not going to work for this trade. This one, you can overshoot to the upside the same way that we can go down to the downside and miss that way.
But just utilizing maybe just this slow churn higher until May. I can't believe that we're looking at May expirations, Alex. This year is absolutely flying as we're already almost in mid-March. It's ridiculous. But that does it for our FOMO segment today. Coming up next, we'll shift gears here and look at an earnings mover or a pre-earnings look at Dick's Sporting Goods out of its earnings tomorrow morning before the open. We'll dive more into that with Renita Young coming up next.
$137, $145. Yeah, not a bad range for some accumulation. A lot of accumulating. Such a cheap price. See if the volume's declining today too. By end of day. Friday was a little less than Thursday. On a red day, that's good. Today's even less. On another red day, that's a good sign. Got bid support on BBBY. I'm right there at 143. Some at 140. 165,000 140 is quite a lot. I was a part of that 143 gang. He thinks his poster's still in the runs. That's pretty pretty proud. Think that is the case. Exactly. Yeah, there's stuff they can like automatically draw resistant lines and stuff. I don't know what they are. I haven't used them, but SPY setting up another little bear flag here. Kind of at the lows of the day, though.
Maybe in the southwest, southeast, you know.
Low?
But Dick's Sporting Goods is the one national sporting goods department store that seems to still be up there. You mentioned the price performance being pretty muted. You're exactly right. It did turn red as the overall market has soured just ever so slightly down to sort of session lows, although they're still up 10. But we're down about 0.1%. Let's call it unchanged between friends here in Dick's Sporting Goods. But about a 7.5% move being priced in by the options, looking at that market maker move. So certainly in anticipation for a reaction here. We'll see if they can keep that streak alive that Jenny talked about. 2 years in a row of beating top and bottom line. Renita Young, always a pleasure. Thanks for the update and the preview on Dick's Sporting Goods ahead of its earnings release. We're going to take a short break. We get back. It is time for a look at Snap. George Tillis is going to...
Nah, rip. He's nailed a few of the runs. I mean, I don't know where he gets his data, but he's nailed it like down to the day, without too many guesses either. The frequency of him being wrong has increased a lot, but that's understandable because GME I think's been fixed. So, and unfortunately, it's not even a good stock really to sell premium on. I mean, you could, but it's pretty low. Nice about holding a stock that has volatility is you can always make money, cover calls if you have a big position, especially. Once that IV comes out though, then you're just sitting on shares that can go up and down, and like a little spike on BY to get some covered calls filled here.
in case this thing does go on for another month. I'm gonna farm. The Superstone guy. Hey, BX. Like normal stocks. That could still be the case. Could still be the case. But normal stocks, a lot of them get a run into earnings too. That's not uncommon. So if Powell's hawkish or dovish tomorrow, I could keep ripping. GME might do it also. There's a new low though on it, 404.87. Yeah, it fell down at 404.23.
Some challenges from Facebook and of course Meta platforms, but also you got to think about Snapchat, which again is not profitable, and of course the elements of unproven monetization platforms like Snapchat are where advertisers really cut back on spending. But nonetheless, the company did cut back on operating expenses in the last year, trying to shore up the share price. But I think this is an interesting, a situation where the company's been trading in a very tight range in the last few quarters. They published earnings back on the 31st of January, where their EPS was down 30%. Now compare that to Meta platforms. Meta actually demonstrated contraction in adjusted earnings by 49%. And the Meta platforms actually showed sales declined by about 4.5%. But Snapchat sales, despite the miss, were actually flat. So it seems to be doing better from the standpoint of not contracting as fast as Meta platforms. But you have to consider what the market prefers now. And especially in the social media space, it really comes down to the profitability profile of the business. And one of the challenges with Snapchat and why it's down 60% in the last year versus Meta platforms, which is actually now flat over the last 52 weeks, is the profitability profile, because Meta platforms is a very profitable business with gross margins that are close to 80% and net income margins that are close to 20%, whereas Snapchat has got 60% gross margins with net income margins negative 30%. So I think this is a situation where we're seeing the value elements of the social media platforms like Meta platforms, which again seems to have a little bit more of a social media monopoly compared to Snapchat. I think that's, again, something you got to consider if you're investing in this space. But Snapchat does have the potential here to grow its user base faster and perhaps even grow its revenue per user, which is about half of that of Meta platforms on a forward basis, assuming they can actually cut costs and generate higher sales, because their active users are growing still in the double-digit range, high double digits, high teens, versus its sales growth, which last quarter was flat, and last year it was only up about 9% year over year.
Yeah, I mean, that's certainly an optimistic take. We just had 3 different social media platforms, or perceived as social media platforms, up on the screen. I'll just kind of talk about all 3 quickly. You had Snap, Pinterest, and Meta up there. Snapchat doesn't have a user issue. People like this platform. They go on a daily basis to interact with their social circle. But we'll hold that thought at that point. Pinterest does have a little bit of a user growth problem, but they got no problems talking to advertisers and saying, hey, those who are on this platform, your ad will be effective in terms of directing them to potentially actually buying this product, because they're on there to do just that, find things to purchase and buy. When you go on Snapchat, you go on there to talk to your friends in a fun way, through messages that involve pictures, through texts that disappear, whatever it may be. It's a messaging platform amongst your tight-knit social circle. It's not something that you're likely going on there to get ideas in terms of things to buy. So the effectiveness of the ad is the question, and that's why the sales have gone down as marketing budgets have tightened up. That leaves Meta platforms. Meta platforms has found the perfect space between the two. They got the most users, and they're effective in terms of delivering those ads, because you're sort of on there for both reasons. You're looking for ideas, you're checking out things that your influencer, celebrity follows might be doing. You're seeing what your friends are doing. It's a little bit of everything, and that's made them effective. But all this now coming back to Snap having a serious issue monetizing its very, very large user base. seeing the stock move 12%, 10%, 11% here today just because there's rumblings that some might say are more bark than bite in Washington, that's not going to solve these problems. And there's a reason why this stock's basically crashed over the last year, George.
Yeah, I mean, just look at the price action today. If you look at Meta Platforms versus Snapchat in terms of price performance, anything that's going to impact or benefit competitiveness is getting a bid today. And that's why we're seeing Snapchat. It's facing the most challenge from competition, even though its user growth is actually 3 times that of Meta Platforms. Its monetizable active users are not growing that fast. And that's the challenge for Snapchat. Just because you get more users doesn't necessarily mean your business is growing effectively. And that's, again, the challenge for Snapchat as an investment versus Meta Platforms. And the other thing is you know, out of only 2 of these companies, let's look at Snapchat and Meta Platforms. Which one can you sleep at night owning? It's really Meta Platforms, because it really came down to operating expenses and cutting them back significantly is what Wall Street wanted. That's anything you want. Zuckerberg company gave Wall Street. Whereas Snapchat, on the other side, has to actually increase its R&D development to expand its product lineup to attract more users, to approach some scalability, to get closer and closer
Is that your
towards
call sign that you made across the bridge safely?
I can see why the stock is higher quite a bit today because of this news. But does
like
it
we're going to
hold
lose you
weight? These are
someday
big
to the
questions you have
bridge.
to ask yourself, especially when the company's still not profitable. So looking at the chart, you know,
party in
around
Discord for you.
$12.50, you can set an alert. If it breaks above that, perhaps on an earnings conference call or the next earnings, that might be a pivot point for the stock to continue to the upside. But until then, it looks like it just might be a short-term rally that may fade based upon just news headlines.
Yeah, and George, I liked the comparison to Meta there because although I wouldn't necessarily say Meta is stable in terms of the two, it is definitely the more stable player in the social media space. So
I'm one of them.
Job they're breaking down the movement in
I just use it for marketplace though.
Move higher, I'll admit, but definitely a name that is known to be volatile.
Which
George
is huge, actually. So many people just use it for that.
That does it for Alex
and
Messenger.
myself
for Next Trend Investing for this
and advertising.
Coming up next,
there's
we
so
have
many
the
eyeballs.
watch list with Nicole Petalides.
That's like one of the best places to advertise. Like CPC, whatever the ratio, yeah, CPC, cost per click. I think Facebook is, because you can get such a huge pool of people. You can target such specific persons, where they live, their age group, their interests. The industry makes more money. Monetization on Instagram, I don't think it's as great as the Facebook revenue, but I haven't looked at the numbers. That's kind of just speculating. Facebook is only for young people. Yep, that's true. Totally. Thanks again, Ace. I appreciate it. So I wicked down through that support, which okay. Yeah, we opened up actually here. Yeah, it filled some of the gap with that move. I went through the process. I don't know if I actually ever finished actually publishing the ad, but yeah, I looked into it pretty deeply. You sent a lobster? Yeah, dude, I got the, you didn't see the notification, you didn't see Will Smith? What? Something else? That's all I saw. I don't know what a lobster is. Let me see. Oh, like a lobster GIF or something?
Yeah, I don't know what you're talking about specifically.
Snapping the recent losing streak, the Dow last week gained. It was the first winning week in 5. The S&P its first winning week in 4, and the NASDAQ was also a winner as well. Last week gained 2.5%. Here are the numbers right now. 4,052 up 7. We're off the earlier highs of the day. The Dow's at 33,418, gaining 27 points. The NASDAQ, we've seen tech doing well today, up 54 points. This is rates have been pulling back. Rates have been pulling back. 12,344, and the Russell 1899, down 1.5%. For some of the biggest stories in the markets, we welcome in
Kyle is holding up well, almost 30%. There's 30% right there.
Trade Network. Wanted to get
That
an
ain't
update
bad.
on Silvergate Capital. Higher on the day, even after it discontinued its crypto-based exchange network. Obviously, it had a big sell-off last week. Tell us a little bit about what you're watching with this story, Renita.
Let's get out of the barcode. Come on, 2 o'clock. Margin calls, BY. Let's go.
And of course, Silvergate
150.
is the bank to the crypto universe. It was hit pretty hard after the FTX collapse. And now we see another key service that's being eliminated from the company. The company announced on Friday that it's eliminating its flagship product. That is the Silvergate Exchange Network. And while that was the main flagship product for a while, it was actually attractive to depositors bringing funds to the bank. As we know, after the FTX collapse, a lot of people took their money out of the bank, right? And so one would wonder, this might have had obviously something to do with it, but Wedbush actually thinks that this is a stock to downgrade. It downgraded it from underperform or from neutral to underperform and cut the price target by more than half from $9 to $4 there, saying that it thinks receivership or liquidation, that scenario is a strong possibility for Silvergate, and that it may arrive at a liquidation value of about $5 per share. Now, more background, even earlier this year, Silvergate reported a $1 billion loss for its 4th quarter. So looking to see what else lies ahead for this stock.
Yes, they suspend the crypto payments network. One of the headlines I saw, this is a very bad sign. The stock down, as you noted, and is down just this 1 month, 71%. I mean, just from last week's big drop off, just this month to date, down almost 60%. Another name, General Electric. RBC Capital makes a call here.
Yes, shares are rising here today, and RBC Capital raised the price target, and it kept an overweight rating. By the way, that price target went from $87 to $93. And this analyst is looking ahead to the Analyst Day that's happening soon, and he expects it to feature updates on that Verona.
Wait, you sent that dono at market open?
Separation. Now, the progress on getting its renewable
What do you mean you made
energy
it across? What are you talking about?
has been a tough road, and they're looking at seeing more
Are you not
progress
live?
and for it to actually break even in
Make sure you're not
2024.
back on like
They're
DVR.
also looking at the ramp up in commercial engine deliveries and services, also including military as well. Now, this analyst says that since GE has been released from what he's calling a deal purgatory, the shares are among the sector's best performers
fell
so far in
asleep.
2023. And GE also got action
Yep,
at
80
JP
cents. Look
Morgan,
at that
who
thing.
assumed at a neutral
Happy you
and
didn't sell it
announced
yet?
an $88 price target. Bank of America Securities maintained GE with a buy and raised the price target to $96 from $92.
All right. Thank you for both of those. Renita Young, thanks so much. Now let's take a look at the bigger picture. Adam Curran's with us, founder at Curran Financial
87
Partners.
even.
So how are you feeling about the market? I mean, last week was a winning week. Of course, a lot of that came on the heels of the Bostic comments and, you know, not being as aggressive on rate hikes, but we're continuing that a little bit here today. What are your thoughts?
I think people are awfully fickle. I think the market's popped up a little bit from its lows, and all of a sudden people want to start hosting a ticker tape
Alas.
parade that we're out of a bear market.
I know, mine is too,
territory, the
actually.
economy, the
Can't
sky
wait
has
to hype over the
parted,
weekend.
and the economic numbers are going to be nothing but cheerful and joyful. And I think the Federal Reserve is going to continue
It's
to
not. I
raise
can't
interest
do more
rates
cash and
well
code puts on
into the
BBY
end of
on
the
the
year.
long term.
Ultimately, the next shoe
buy
to
more
drop
shares,
from
though.
that is going to be the real estate
Strange.
market. I think most people in the real estate business are already admitting that volume and transaction
Yeah, I can buy
activity
more
is
shares.
cooling off. That's going to come to a screeching halt, in my opinion. And then people are going to start losing their jobs because of that. 20% of America's GDP is driven by real estate transactions. So eventually, as things cool off in the real estate market, so goes the real estate market, so goes the American economy. And I think that's starting to happen. And there's not going to be any amount of money changing. There's not going to be any amount of positive and happy tweeting that's going to change the direction of our American economy, which is like a huge oil tanker.
I see. So at this point now, with rates
Well, just like
still likely to be
buy
on the rise, you said jobs
even
are
more BBY
gonna
and just
fall off.
do
We'll get a
aggressive cover
jobs
calls on a
report
lot
this
of them just to
Friday. I
get
mean, last month at
make some of them free.
517,000 jobs added. Wow, to everybody. It was well beyond even the highest of expectations. Are you expecting some revisions, or does it even matter?
Well, if you actually sunk your teeth
But
into
maybe I already
that
have
jobs
that
number,
that
when you
amount.
look at the seasonal adjustment that
I added them
was
up. I've got
credited to that jobs number, we actually had a reduction in the overall number of jobs. It surprised analysts, but there was a massive seasonal adjustment there. In fact, it was a bigger seasonal adjustment in January of 2023 than what we had in January of 2022 when we were still dealing with COVID and lockdowns and the pandemic wasn't officially announced to be over. So I don't think the jobs numbers are nearly as joyful. I'm sorry to rain on your parade here, Nicole. I know I'm kind of bringing a bearish message here.
23,430.
It is what it is. I mean, are you surprised to see market even moving higher or getting to the highest level since mid-February when you have Powell
Seems like a
speaking
lot.
this week?
Yeah, I like I said, you know, we don't focus too terribly much on
They do
these
cover calls on like
short-term
10,000 of them.
economic indicators, as they're called. For one, I think they've been artificially manipulated to a certain degree. When you look at a seasonal adjustment that's in the Bureau of Labor Statistics,
Can you say something about
that just
lobster?
kind of defies all logic.
on
Jerome
here?
Powell is going to do what Jerome Powell does, and he's going to be kind of
Oh, the
thoughtfully
lobster.
use
Yeah.
his
Sorry, Will
words,
Smith.
But I think he actually
Baby, have the
is
lobster,
doing the best
caviar,
job that he possibly
anything you
can.
want.
I know everyone wants to kind of throw him under the bus, but I blame a lot of what we're experiencing right now on Janet Yellen kind of sitting on her hands when in reality she should have been raising interest rates when we were in a white hot market. Now he's doing it because he has to, because inflation is running the way it is. But I think he's going to be slowly raising interest rates well into the end of the year. And unfortunately, you don't fight the Fed when they're lowering interest rates. You don't fight the Fed when they're raising interest rates.
Right, right. So now, tell me what investors should be doing. I know you're looking at short-term bonds. That's something that has been working for folks, dividend payers, but cash is king and hold off on big purchases. So tell me a little bit about some of these ideas.
Cash is an asset again. And for the longest time, everyone was talking about how cash is not an asset, and if you sit on cash, you're losing money safely. Well, we're seeing money markets over 4.5%. The risk-free rate when we buy treasuries and CDs is pushing 5%.
Yeah, I think so.
That is not a bad
stock
place
type
to sit
algo
on your
thing.
hands and weather out an economic storm.
Look
Vanguard
at the bid
did their
support.
2023 economic outlook, and they only anticipated U.S. equities to grow to the tune of 4 to 6%.
143 has 112,000.
Well, if I have a bird in my
140 has
hand, and I
169,000.
could put money into a risk-free asset that's making 5%, and see how deep this recession is actually going to cut, that makes a tremendous amount of sense to us. Same thing with dividends. Dividend models that we run are yielding 5.5% in many cases. I mean,
Hey,
that's
so
a
you
wonderful place to
called the
park money,
rally
collect
and
interest,
profited on held
and
is.
not really worry about the world burning
What
around
was the
you.
other one? Oh, GNS.
Understood. I mean, at this point now,
got-
when
you
you
grab-
say
you
hold
grab
off
both
on
those.
the big purchases, what kind of purchases are we talking about? Like autos and durable goods? And when can we make those purchases?
Yeah, I think if you're in the market for a luxury home, a second home, a vacation home, an RV, if you've got a sweet tooth for fine art or wines, I think all of those transactions you pump the brakes on, and you wait for interest rates and the real estate market to correct itself. I don't think we're there yet. And I think a lot of people, if you've got that second home that you want to sell, I would be rushing to a realtor to put that thing on the market, because I think there are some people who still think we're in the same exact real estate market we were in a year ago when lending rates were 1/2 the cost. And it's just commonsensical. When lending rates double, your real estate's not worth the same amount. Now, you might be able to find a sucker to buy it. And so if you're selling, I'd be quick to put that thing on the market. But if you're buying, I would sit on my hands and wait for more red in the streets.
Yeah, all right. And
I know, I'm assuming you crossed the bridge at market open.
All the real estate
But I think you are behind.
Adam, it's
Hit
great
live.
to be on. Look, people have to have different views of this market, and there are some warnings to be had. Adam Curran, thank you, founder, Curran Financial Partners. Come back soon. Thanks.
SPOX, I could hit a bottom.
By the CEO of
Bouncing here now.
Following its latest earnings report, we'll break down the numbers and see what
Probably
lies ahead for that
back to
company in
VWAP.
2023.
I don't know if I like this long though. Maybe bouncing a little bit. Bed Bath needs to wake up sometime today. Wakey, wakey.
Highest pricing power of any company we cover. And here's a look at Bitcoin today. Right now, 22,565. it's time to welcome in our next guest. Eddie Gifford's with us, wealth advisor at Tactive. Eddie, nice to see you. Thanks for being with us. So what are you thinking here with our recent market action? What's your interpretation?
Well, thank you for having me, Nicole. I think that what's going on is that everyone's still trying to figure everything out, right?
Red candle here.
The issue that we're seeing is the same issue that we've been talking about for the last 12 to 18 months, which is inflation. And we know that Powell has been very, very hawkish, and he continues to say that he's going to raise rates, and that continues to be the number one enemy. So with that in mind, we have to expect rates to continue to rise. We have to expect them that once they do rise, they're probably going to stay there for a while. Right now, so if we're looking at things from a long-term perspective, we think that things could get a lot worse before they get better. However, when we're looking at things from a more shorter-term perspective over the next, month or two, things are looking a little bit okay. We see some relative strength, technically speaking. And we think that there is some at least short-term upside in the markets. Of course, everything that we're always doing, we're always making sure we have a predetermined exit strategy. But because of that, we're definitely taking some nibbles here at least.
Interesting. I did think it was also interesting how, look, people were saying 5.5% for the Fed. Why not 6? That's something on your radar, isn't it?
Definitely is, and I think that it's really a tale of two stories. It's either they go to 5 and they stay there for maybe 2 or 3 years, or they go up to 6, potentially even 7, and then they're back. Then they ease back down. It just depends on what they want the economy and the stock market to look like over the next 9 to 12 months. So, we're definitely looking at both sides of the fence here and trying to position for our clients to where they're at least protected against both extremes.
I wanted to get to your picks, but I just think about inflation and how the consumer is feeling. And one of your picks is actually Royal Caribbean. Maybe, sort of incorporate how consumers are feeling into that pick as well.
Of course, yeah.
Gee, let me think. Sure.
It looks like at least an interesting buy right now. There's a lot of momentum behind the stock, and when you look at it from a consumer's perspective, I've talked about some different casino stocks in the past on here, being from Las Vegas, but the consumer still wants to go do stuff. I talk to clients all day long, and they're like, "We need to go on vacation." I just had my relationship manager say, "Hey,
there's a drop on BBBY."
And so that desire and that demand is there, and so. Where can you get a lot of, fun, where everything is taken care of for a relatively low
Broke
price?
through the bottom of the barcode.
Speaking, you can get that from the cruise lines, and so I think that the cruise lines do
just
have some
the low at
upside
42.
here. Is it long-term upside? I don't know just yet, but I do think that at least short-term over the next 3 to 6 months, we could probably see a little bit of a runway here.
Yeah, understood. And with inflation just still prevalent at this moment. And
it wasn't worse here for the rest of the world, I wouldn't say,
no.
no.
You do have a treasury fund,
There's a dibs about the
fund. Tell me a little bit about USFR.
Other countries got
so
hit worse by it, I
USFR is
think.
just a floating rate treasury, but
not all countries, but Iceland, I think, got hit really bad.
I'm scared. I don't know what to do. And
no, European countries got rocked from it, and they're still.
The previous guest mentioned, cash
some are
is
still.
Not an asset. You can get paid to wait now.
Messed up from it.
5%, just sitting there, letting the collecting interest while you wait and see what happens. Now, we don't like waiting and seeing for.
That's really when after we got off the gold standard in the 70s. Other than that, 2008 from then on was really when we started just getting the complete frothy, propped up market based on nothing.
So before we do something like this, we always predefine, okay, what's the
political power or influence,
it's like, hey,
and money printing,
why not just
quantitative easing,
make 4.5%, 5%,
as they call it.
You can let things ride out.
So that was really
if we're right and the market
beginning of that.
Underneath us,
see it on the spy chart.
Then you're gonna have a lot more capital to buy stuff on sale, and if we're
Market said,
wrong and the
no, we don't want to
higher,
keep coming down
we
after
should
crazy
maybe
bad
do
recessions of
in the meantime.
speculative assets and
Understood.
people
you also
living
have the
outside their means.
semis.
We just
Tell
want
me about the
to keep
semis.
propping it, so we'll just
the
do that.
So
no more
there's still a lot of
recessions for
whispers
us.
out there about a lot of stuff happening in the semiconductor
Quantitative
space
easing,
in
yes.
general. And we recently saw NVIDIA beat on earnings.
Now all of our recessions have been muted.
We can continue to see that rise. Plus, if we're just looking from a technical standpoint,
2018, 2019, there was
as well as kind of like
a bit of one, but we were already heavy into quantitative easing. COVID was
kind of on the
scare,
just above the 200-day moving average, and it looks like we
increased our money supply more than we ever have in
here.
a year.
So we're not scared of it, and at the end of the day, you got to find like some risk reward entries that can make sense. And so we like semis here. Of course, we have our predetermined exit strategy in a worst case scenario, but we're not afraid to swing every once in a while.
And then in the world of commodities, you were looking at Steel Dynamics. Tell me why this one jumps out at you as a pick, as a winner.
Well, I think it's one of those things where when inflation runs hot for a long period of time, you end up in a situation where people want to own the stuff that they can touch. And steel is one of those things. We're not going to stop building in America. We're not going to stop kind of trying to develop more infrastructure. Now, of course, steel is getting beat up today, but if you look at it over the last couple of months, you can see that it's just kind of on this upward trend. So we're okay with it breathing a little bit here. And we think that if inflation continues to run hot like the perspective is out there, and interest rates continue to run high, then something like steel as kind of a commodity hedge in the portfolio works out really well.
Right. Eddie Gifford, great to see you. Thank you so much for all those picks and your big picture outlook. Eddie Gifford, Wealth Advisor at Tactiv. Thanks.
Thank you.
Coming up next, we'll be joined by the CEO of Pubmatic following the company's most recent earnings report. We'll dive into that report, learn more about the company, all here on the watch list.
That always looks like Pubmatic to me. White House will continue monitoring reports on problems with cryptocurrencies. U.S. regulators seek more engineering information from Freeport LNG to evaluate export facility. Maybe that's part of the sell-off on nat gas. U.S. regulators asked Freeport LNG about condition of facility and steps needed to restart operations. I don't think it is, but oh, there's a flush on BBBY 140. Wow. Not what I wanted to see.
That's 13% top line growth compared to 8 to 9% for the market. So we continue to grow our share. And we're also pairing that with significant profitability, 87 million in cash flow from operations. This is our 10th consecutive year of profitability. And obviously we can contrast that to many companies in tech and in the market in general that are trying to figure out their path to profitability. And we also think our stock is a great investment. And so we've launched a $75 million repurchase because we think it's a great investment over the long run.
Right, understood. I mean, the profitability story, the cash flow story is one people focus on in a big way. In the meantime, tell me a little bit about the business and ad spending and where that all falls into place. I know there's a big landscape and a lot of challengers, but what are your thoughts here?
Sure. So we're really focused on the open internet, which is where a lot of the premium publishers publish their professionally created content, and users, of course, love and appreciate that content, and they get to enjoy that for free because it's ad supported. And you're right that there's absolutely an economic cycle here, and we've managed through successfully as a management team, multiple economic cycles. And what we see is that ad spend growth inevitably comes back, and it comes back even bigger. In particular, digital advertising growth is only going to continue to grow as a share of total advertising. It's about 2/3 of advertising today, and even as advertising continues to grow, albeit at a slower rate in the near term, digital is going to continue to gain share. And so what we're really focused on is investing in and innovating around the highest growth ad formats. So for instance, our connected TV or streaming business grew over 3x in 2022. Our mobile business is growing at a very rapid rate. And we've got great customer retention. So 97% logo retention with publishers in 2022. So we have a very strong business. Obviously, we need to manage through the current economic cycle, but we're very confident that ad spend will come back. And our focus is on how to drive outsized growth when that happens.
Yeah, and when you mentioned something like connected TV being a key to revenue,
I don't think it was a bull trap. I think those signs of a bottom and reversal still.
Whether it's online, putting out content, streamers. I mean, there's so much for the ad spend. It's such a fragmented market for advertisers to split the money. But you do think that it's coming back. You feel good for the
It'll probably fill this gap.
Yeah, I think it's never been a better time from a consumer perspective. You've got obviously traditional TV companies, like an NBC or a Paramount or a Warner Brothers Discovery that are moving into streaming more and more. You have some new challengers like Netflix, right? That's bringing more ad-supported media. You have international broadcasters and content providers coming into the market. And so from a consumer perspective, there's lots of choice. It also creates a lot of complexity for advertisers, right? Where should they allocate their budgets? How much should they spend? And so this is a key problem that we help solve, which is matching buyers and sellers of streaming inventory. And as the scale increases, as the number of shows, the amount of content goes up, it's increasingly clear that this has to be done through automated means, through technology to match buyers and sellers. And that's why we're seeing such great growth here.
And then as the macro environment continues to evolve, to change, tell me a little bit about that. I mean, we have a rising rate environment. There are concerns about jobs. I mean, when we think about our economy, what is the development in your business, and how does this all intertwine? Why does it matter?
Yeah, so the economic environment clearly is uncertain, right? There's no doubt about that. Your last guest on was talking about how far is the Fed going to go, and when are interest rates going to peak? And of course, nobody knows the answer to that.
That's good.
And so what we are focused on in this uncertain period is really getting closer to our customers, and so that's deeper integrations, more innovation,
it's like a
more
double
ways that
bottoming
we can
here.
help them.
Go long.
And in fact, in January of 2023, so just about a month ago, we closed 50% more deals than we did in January of 2022. And the reason is that publishers are looking for more revenue, in this uncertain environment, and so they're engaging more deeply with us. And so we're doing that work. We're integrating with them. We're innovating. And so when that ad spend growth re-accelerates, which inevitably it will. Now, will it happen later this year? Will it happen in 2024? That's the question that nobody knows the answer to. We're going to be very well positioned. And in the meantime, we continue to generate, very strong profitability. So last year, almost $40 million in free cash flow, and we've told investors to expect a similar number for 2023. And so we think that's just a remarkable outcome that we're forecasting, given this slowdown in the economy.
Right, and you know, you're an independent technology company delivering this digital advertising. You're going to be presenting at a couple of really key conferences in March, beginning with tomorrow. You have JMP Securities, you have KeyBank. There's a couple of, what do people ask? Because I know they want to get the ad dollars their way. What's your advice to those kinds of clients?
Yeah, I think investors are really looking to understand when does the economy turn, and how are we, making sure we're putting our resources and our energy into the most profitable and the best priority opportunities. And so we've gone through a process in our own company over the course of 2022. We took out about $10 million in operating costs in the second half of last year. So we're making sure that we're allocating our time and our resources to the most profitable outcomes. And again, that's things like video, connected TV, and also retail media, which is retailers getting into the advertising space. And then the second thing that we're doing is making sure that our business model is extremely sound, and you can see from the profitability metrics that we have a very proven and very sound 10 consecutive years of profitability under our belts. And so we feel like we're in a really good position to continue to innovate during the uncertain period, and then have outsized growth when ad spend does come back.
Yeah, it's great to speak with you, and I know
Sounds
your
about
presentations and these conferences will then be online on your site, in your investor relations part of your site. So I think that's exciting for folks. They'll be able to watch some of the replays of those presentations this week. Rajiv Goel, thank you so much. CEO
Double
of
bottom, a good
BBBY.
play.
Thanks for being here. Coming up next, let's talk about a recession and how that could impact certain groups of stocks. You don't want to miss that. And take a look here at the S&P 500.
Does everything go to the casino to lose the rest? Nice. The dude goes to work every day. He crosses a treacherous border every day. You think it's for fun? GME moving up a bit. Yeah, I think SPY might be double bottoming here. I'm gonna try. I'm letting GME front run SPY here. This is what GME does. It pulls the SPY up. Cattle baby. Wicking on the top there. Yeah. Not a double bottom. See. Don't like that gap still to fill the downside for long. That candle closed ugly. Kind of BBBY. So Bed Bath barcode is now $1.40 and $1.42. I think I'm gonna sell a shirt. Happy Money on the back, the front. Bed Bath barcode. Just a picture of this. I did it for 20 minutes. Yeah, we did get a dip down to 140. I was hoping that 142 would hold. That's not as good looking of a reverse head and shoulders, but still there nonetheless. Still have a engulfing down here, so might form a double bottom before rally. Maybe more on the table now than it was. Skyrocket might need a catalyst. There's a ramp. There's a lot of things, but might need some kind of catalyst. I think bounce could happen though, just FTDs and such. Something sustained though.
Crude oil. So there's a couple factors coming into play. Also this morning, we started off the week, much like last week, talking about China, right? Last week it was stronger than expected PMI data. This week it was the weaker than expected growth forecast. But I think the market came to grips with the fact that, again, 5% out of China still ultimately means for some pretty strong demand for some of these energy products. We also did see crude oil this week, the Brent back to $80.50, and I'm sorry, that's the WTI, the Brent to 86.35. We're seeing prices at the pump inch up ever so slightly. AAA reporting national
There's new
average
beaches
up
in
to
America
340 from
too.
336
Jason.
last week, but I'm not sure if you saw the big move in natural gas today. Look at this, down 14% as we speak to 259. Here you can see a sharp move lower today. Now, recently, Nicole, we saw natural gas below $2. It recovered quite nicely back to the $3 level, but you could see coming off again here. And, you know, I think a lot of this is just expectations for less demand. We've been seeing a warm and unseasonably warmer than expected temperatures throughout the Midwest here and in Europe as well.
Exactly.
And, you know, when you consider that energy crisis that we had debated quite a bit in terms of the impact that would have on Europe, this is a good thing.
Right, understood. That 14% move, I'm so glad you highlighted it because
Look it up,
I
man.
saw that first thing this morning. Ben Lichtenstein, thank
Lichtenstein.
you very much. Good to see you. Now let's turn our attention straight over to David Tice, Senior Advisor, Ranger Equity Bear ETF, HDGE. Good to see you, David Tice. You're thinking recession coming.
Yep, just old people see even in Germany.
Some recent strength that we've seen and what your interpretation is. At this point, you're seeing some down arrows ahead.
Well, I've been in the market for a long time, working with my partners at Ranger Equity Bear, and we saw a decline in 2022, and we've had a quintessential bear market rally. But you look at the signs that a recession is coming. We obviously have an inverted yield curve. We have all leading indicators are at very, very low levels today. When you look at the Fed is even predicting 100 basis point increase in unemployment.
That's exactly right.
And whenever there's even been a 50 basis points move in unemployment, there's going to be a recession. You look at CEO confidence being as low as it is, indicates at least a 20% decline in profits.
Yeah, and we'll get more on the jobs picture this
All right,
Friday.
Spy. I know you want it now. Look at that. It's going to do a VWAP rally here.
It's possible it's a little better. I think longer term, I'm not a real short term, tactician on the strategy on the unemployment. unemployment is obviously a lagging
Can't
indicator.
unsee that.
There's also consumer expectations to buy a home or a car are at recession levels. Recession is coming. The other thing, these interest rates, we've essentially had an interest rate shock, with rates being up nearly 400 basis points for a lot of businesses and consumers. And the reset takes a little bit of time sometimes, but we have
Thanks, ST. I appreciate it, mate.
of
Hope you have a
debt
good day at work.
that's being rolled over the next 2 years after this year.
Just
and therefore,
barcoding
this is coming.
action
That's
today.
going to hurt profits, and it's really going to hurt profits in a recession.
I see. So at this point now, tell me a little bit about the fund and how it operates and how investors could use it wisely.
Ranger Equity Bear shorts very, deteriorating companies with a lot of debt, companies that are, we short a number of zombie companies. There's zombie companies out there that have $1 trillion worth of debt. And as that debt interest rates are reset, is going to be a big, big problem for them. So we short bad businesses. And then so sometimes in rallies, these bad businesses actually outperform, which makes it tough sometimes when the market's rallying. But when the market declines, these bad businesses do terribly. And we see what's going on with the Russell today. And actually, you look at the S&P 400 has done okay lately, but the S&P 395, excluding the top 5, has not nearly done as well.
CarMax Digital Realty Trust, Invitation Homes, these are some of the names on that list. Are these all zombies, or is there
held
a
up pretty
theme
well,
among these
CarMax.
companies?
No, these are not all zombies, but we have an analytical method.
Interesting, he even calls them zombie stocks.
And Brad Lamensdorf, my two partners.
Coming back from the
Brad's
dead.
more the tactician on the technical side, but John is
Now it looks
someone
like
I
consolidating
taught
before new
teaching
low, maybe.
about quality of earnings and companies that are declining underneath in terms of cash flows, debt levels, playing games with their results, cutting back on discretionary expenses, et cetera. These are the kind of companies we're looking for. We're looking for companies that
if you
are
end the year and you're
overpriced, that are
net
going
positive,
to
you have to
decline
pay
a lot
taxes
in a
on
bear
it.
market.
Unless you have carryover losses.
What would you tell Jay Powell? I mean, we'll have the testimony this week, the 2 days of testimony, but end of March 22nd, I believe it will be the Fed day. We'll find out what the Fed
It
will do
varies
on
depending on
that
how
day.
much
A lot of
income
people
you
are
make.
thinking a quarter point, but you'll have May and June. What's
Stop
your
loss? You have a
advice to Jay
stop loss
Powell?
down here? You're gonna
Well,
definitely try
frankly,
and
I
trigger
think
it.
he might be trying to protect his ego a little bit too much, where he really wants to be Paul Volcker. And
From
we
what I
haven't
read.
really seen this magnitude of
Get
shock
that out of here,
in the
Jason.
interest rate area for a long, long time, if ever. And essentially,
YouTube
I
video.
believe what David Rosenberg's talking about as far as inflation is truly coming down. And you look over the month-over-month numbers, we had a little bit of a hiccup this last month, but I still think rents are coming down, wages are coming down. I don't think inflation is going to be as much of a problem, and therefore I think he's probably taken too big of a risk by continuing to increase rates at a 50 basis point level.
Too big of a risk. I look forward to speaking with you again. David Tice, thank you. Senior Advisor, Ranger Equity Bear ETF. Thank you. Still ahead, we'll bring in our panel to discuss restaurant stocks, potential winners and losers there. And what about IPOs for 2023? The Watch List will be right back.
Yum. Shrimp, chicken, parmesan. Woo. Stocks go down. Buys up. GME's up. Snap's up 12%. Rumble's up 11%. Olive's holding strong at 31%. How's Durka? 48%. Hi, Sarah. Well, so I got that bullish crossover on the MACD here on 5 minute. It did look like a double bottom, but now it's resisting this little break. $135. Yeah, with today's low, I'm thinking we might be retesting. I didn't want to break this 142. So end of day, if we end up just wicking out of here, maybe not. But yeah, it's possible we still don't. Just the inverted head and shoulders looked a lot nicer if we held up above here, held these wicks. Breaking through that, might get a retest here a little lower. I'm thinking potentially. I'm still long though. I think I bought more today. Yeah, I did. So I like the chart. It's, you know, it's at this support more or less. It's a little bit above it, but at that support, and got that engulfing candle. Another day, if we don't just keep dropping, we'll get a bullish MACD crossover too. But we'll need to kind of rally back up to 150 or so. Actually, it could even happen today if we get up to 150. We might even get that crossover. No, we'd have to wait at least till tomorrow. I mean, it's consolidated more or less, BBBY, for the last week. It has been going down for like a month, and then this is consolidation. So since February 24th, once you saw some buying pressure, might come down, might go up, might come down, but it's starting to trade in a range. So this looks good. Good for opening up a position. Buys coming down here. But it does need to hold some levels for this to actually be consolidation. Or consolidation before reversal, not consolidation before more downs. Been for 20 years and finally made 300K. Jeez. LHA? What is that, Jan? I don't have a whole lot of push one way or another. Like, of course, an icon or an RC being the secretive investor would be bullish. SPY's kind of dropping here now. Got 10 minutes into power hour. I think the only bearish thing about Hudson Bay is their history with some other companies and what they've done. That's the consensus around why it'd be bad if it was them. But I don't know enough about it to have an opinion to say, oh, it'd be so bad if it was Hudson Bay. Oh, Lufthansa. BBBY and BBBY are not the same at all. BBBY had massive insider selling, like AMC. Also had insider trading. That's also bad. Not as bad as insider selling if you're an investor. I don't really care if someone's insider trading.
I mean, the first, reason is just valuation. It's a very expensive stock in a market where expensive doesn't necessarily pay off. Number two, that coffee category, tends to be very sensitive in an economic downturn. One of the first things that goes within the restaurants category is coffee. When consumers become incrementally more sensitive.
The stock's got quite the following.
For those two reasons, at least those two main reasons, I prefer to be on the sidelines for now on Dutch Bros.
And RJ, tell me about the IPO market. What about all those names that were supposed to go public?
I'm going to close out of this long if this breaks here.
What do you think the IPO market looks like this year and next?
Yeah, it's a good question. We saw the big rush of IPOs in the late 2021 timeframe. Dutch Bros, First Watch, Portillo's, a number of great names that came out, and obviously there were a number of other names that were rumored to be coming out. To start this year, there's been rumors that groups like Cava and Panera Brands and Fogo de Chão all interested in going back to the public markets, and I think it ultimately comes down to market volatility more than anything else, and before anybody would explore it. But it is interesting to take a look at some of these concepts because we are seeing some pretty healthy visitation trends. Kava caught our eye. It's a name that it's been very interesting to watch as a private company, just because Mediterranean concept typically has not had the same kind of demand that Mexican or Italian or burger concepts have had in the fast casual space. But as we've seen, they've actually narrowed the gap quite a bit, and right now they're running about even in terms of the overall fast casual category in terms of visits per location. So seeing some pretty healthy improvement in visits per location. I think they're targeting a younger audience that typically hasn't been at some of these fast casual concepts. So pretty interesting stuff. So we'll see what happens in terms of the overall IPO market, but some very exciting concepts on deck here.
Yeah, and at the same time, you also talked, RJ, about in QSR names that have really pushed forward. You had McDonald's, you had Yum Brands. Just tell me about some of those concepts. What's going right? You like those names, right?
I do, and what I like about it too is, well, really they're both driving traffic in different ways. I think a group like McDonald's, it's more about kind of the celebrity meals, the different promotions they've done. Really excellent job executing on that too. You really haven't seen a lot of focus on value, which has always been McDonald's hallmark. It really has been more other things that are driving people in, and I think a lot of it is the digital app. And what we've seen in our numbers is seeing a lot more frequency among visitors too. So that customer frequency, not only more people coming in, but more frequent visits from existing customers. And I think that's a really healthy metric on that one too. On the flip side, Taco Bell has really been leaning hard into value right now. I think that's working. I think that if you look at kind of the concepts in this market right now and what consumers are really looking for, value sells. We've been looking a lot, helping out a lot of restaurant chains look at what happens when they raise prices. And we do see a pretty immediate response from consumers in the environment. Well, they've been accentuating kind of this dollar, this low price. I think it's working for them. So I like the players that can get away with that and do it very well. So.
Right, understood. Nick, tell me a little bit about a name like Papa John's, because, people always thought pizza was so great. You had mentioned Wingstop as a winner. Pizza and wings seem to always make it through, but at the same time, you had some concerns about a name like Papa John. I know they're still doing buybacks and such, but the pandemic's over. Why is this one a neutral and not a buy?
Papa John's is still kind of, it still has to get over the hangover from COVID, right? So, I mean, we just saw a lot of market share gains by pizza during COVID. And so as things normalize, as the consumer normalizes in terms of their habits, pizza is going to be one of the things that, falls behind a little bit. So I think for, at least for the next year or so, there's going to be a little bit of a normalization that's going to work against the pizza category. And, a year from now, I think, everything's going to be fine. So longer term, I still think, Papa John's is fine. It's just that in the near term, at least in 2023, there needs to be a little bit of a normalization in the U.S. And they also have quite a bit of exposure to some of the international headwinds, particularly in the U.K., that seem to be accelerating, not decelerating. So those are a couple of reasons why I'm on the sidelines, regarding Papa John's.
Yeah, I mean, you have Domino's Pizza in that same realm. I mean, under the Yum Brands umbrella, you have Pizza Hut. But final thoughts, Nick, here on the group restaurants.
Again, I mean, I think you can just avoid a lot of the uncertainty and volatility by sticking to the highest quality names in the near to medium term. And that's just a strategy that I'm advocating right now. And Wendy's remains our top pick.
Right. And RJ, I mean, you thought Steakhouse was good there. That was a winner to you. Final thoughts, RJ?
Yeah, I mean, I guess, more than anything else is kind of the groups that are executing more than anything else. A lot of, the last couple of years has been marked by turbulence in this restaurant industry, and those who've really adapted to changing consumer behavior, whether that's an experience for some of the full service guys at the steakhouse level, First Watch and some of the value that they have, or at the QSR level in terms of value, or just being able to connect with consumers through a digital app. Those are the things to look for. So I don't think there's any one category in particular. Really look for individual stories, groups that are executing well. I think that's really the key message. And to Nick's point, the large players, the players, that's usually your safe play here too. I think that's a worthwhile strategy.
Thank you both so much. Nick Setien of Wedbush Securities, RJ Hottovy of Placer AI. Good to see you both. Thank you. Love talking about these restaurant stocks. That's going to do it for us here on the Watch List. I'm Nicole Pedalides, live at the New York Stock Exchange every single weekday, 11 a.m. and 2 p.m. Keep it right here. Market on Close is next.
Bottoming still, but maybe just consolidating before new low. Gap looks like it wants to get filled. Three minutes to power hour. Maybe a rally. It was at 150 this morning. Julian. It was higher. It was 154 this morning. Only down 4.9%. You guys are crazy. Just like sentiment. Sell everything and go to the casino. It's down 4% today. Oh, Spy's about to flush, aren't you? Made a new low? No, didn't. GME with a pop. Interesting. Very interesting pop on GME there with nothing, no support of the SPY with some volume. That is new low. Yeah, GME is moving up a little bit. Coming into power hour. CNS close. Scrambling. Scrambling around. What are we, rabbits? All right, there's 3 o'clock. Look at it just flipped the wick. Did you see that? All right, it is power hour. SGM held up nice.
Filling in for Oliver Rennick. It's Monday, March 6th, and we have a lot to get to, so let's get started with what's coming up in the next hour. We're going to start out by catching up with the team at Morning Consult to get you prepared for this week's big labor market data. Then George Schultze drops in with a few different stock picks to keep an eye on. And as always, our options corner will get a few unusual options trades in Emerson Electric, Palo Alto Networks.
Which way are you gonna go, Spy?
Now let's check out what the markets are doing. Right now, the Dow Jones is higher, you could see, but more so unchanged. The NASDAQ is...
Yazzie Power Hour. Party City's up 14%. Weird little CNS close move on GME there. What kind of power hour is this? New York Stock Exchange, Citadel. Got a flush here. Looks like it. Citadel Securities and Charles Schwab warned that the U.S. SEC's suite of proposals, they've got Charles Schwab on there now too, suite of proposals to overhaul stock market rules could harm investors. BBBY news, guys. S&P GR upgrades Bed Bath & Beyond to CCC negative. Outlook negative. I guess it's an upgrade from where they were. White House said to consider pushing Congress on dealing with TikTok. Natural gas posts largest one-day decline in 8 months. Ending down 14.5. What do you mean ending down? Day's not over. What's the matter with these people? Alright, I'm getting out of my long. It'll probably rally back up, but I'll let Phil like gap.
Powell, who was harsh and very significant in his fight against inflation. It's going to be a tough call, Renita, but remember, then it's question and answer. And these senators, remember, he starts Tuesday with the Senate and then Wednesday with the House of Representatives, and then they ask questions. And so are they going to ask him about inflation? Are they going to ask him about inflation that looks like it's turning back up? So yeah, it'll be very interesting, not only his statement, but the question and answer period as well when they get to him. So, this is normally something he does twice a year, and it's usually he makes some headlines. I don't know if he'll be able to avoid making headlines tomorrow, Renita.
Good point. We'll find out which Jerome Powell we will get tomorrow. But let's move on to a couple stock-specific pieces of news. There's a new possibility of a TikTok ban law coming out. So what are you thinking about it and how it's impacting Meta and Snap today, which popped?
Sure. Well, remember, TikTok is a competitor of
I fill in this
Snap
gap
in their small movies and in Reels on Instagram and Facebook, their small movies. Take TikTok out of the mix if they were to pass some ban on TikTok, and suddenly Snap and Reels get much more popular. Now, Reels has already been making some headway in terms of its popularity. Take TikTok out, and now you've got a whole different landscape for these two companies to compete on. So I think it's good for Snap. I think it's good for Meta, which obviously owns
Snapchat,
Facebook, Instagram, WhatsApp. I think that's the big turn. That's the binary choice here. If something happens where TikTok
respond to their
is
share, had to do it
in the U.S., it's a big win for Reels and Snap. I think mainly Reels, actually.
Mainly Reels, you're right. That's probably, spot on, Kevin. But let's shift now to the airlines. Now, we know that JetBlue and Spirit, they've been talking takeover talks of Spirit, right? And that data earlier today came out that this could prove good competition for the big airlines, but there's now possible pushback from the Department of Justice. How are you interpreting all of this right now?
Yeah.
Well, right when this
double top here, probably
was
moved back
proposed,
BWAP.
I think the
or maybe
legislators, Department of
72
Justice,
cents.
came out against it because these are both discount airlines. They thought it would hurt competition because eliminating those two companies from competing against each other. These two airlines are trying to make the case that making them bigger and stronger, fortifying their balance sheet, would make them better competition for other airlines. This is one that's going to be tricky. You have to make your case, just like when regulators get involved in any corporate takeover, much like Microsoft is going to have to do with Activision. You got to make your case. You got to prove that to the regulators that this doesn't hurt competition, but actually is good for it. Can they do that? I don't know. Less airlines, by definition, means less competition. I don't know if they can sell that, Renita.
No, not sure at all. You can lump in all the other major acquisitions and mergers that have come across the desk with that one. I mean, it's going to definitely be the year of antitrust. So, Kevin Hinks, thank you so much for joining us as always. And now it's time to bring in Jesse Wheeler, economic analyst for Morning Consult. Jesse, thank you so much for joining us. Now, Treasury yields spiked above 4% last week, and they've fallen a little bit since then. And now, of course, all eyes are on Jerome Powell, who's going to talk starting tomorrow.
And there's the bounce.
Walk us through your thoughts ahead of his testimony this week.
Yeah, that's correct. I think all eyes will be on Jerome Powell tomorrow and also on Wednesday, and of course on that jobs and labor market report out at the end of the week. It's been a full year since the Federal Reserve started. It's very what turned out to be a very aggressive rate hiking cycle. Yet we're still, and while we've seen an impact on business investment, especially in the housing market, the impact on labor markets is few and far between, and inflation still remains pretty high.
Pretty high. And so since those two competing, I guess, pieces of data are still happening, right? What's the likelihood of a 50 basis point rate hike?
A ton of volume.
I think, after, over the course of January, we saw a series of surprisingly hot economic data points from a blockbuster jobs report to, subsequent inflation prints, and then also, retail spending, bounced back. So I think that, and we'll hear Powell talk about it tomorrow, but this led to a significant repricing about the yield curve and, how high those heights are going to go. And so, I think that 50 basis points is probably, looking pretty sure at this point, and, the Fed could go even higher.
Now, moving along, or back really, to the jobs report on Friday, what are you thinking we should expect if the number comes in better than expected again?
That would be, just more fuel for the fire, and, more of a reason for the Fed to continue its, this hawkish path, and certainly, take away, any space that they might have to, to pull back, going forward. Here at Morning Consult, we're tracking, lost pay data, and just in the last couple of weeks, we saw our tracker of lost pay and income, hit a new serious low, which continues to, show, real kind of job market strength. Fewer and fewer Americans are reporting lost pay and income, and of course that unemployment rate overall is at, the lowest level it's been since 1969.
I'm glad you brought that up, because a lot of people, they're seeing this imbalance, obviously, in the data and what the real true situation. What are some other real life situations that you've been seeing that aren't showing up in the data?
In the labor market?
Yes, in the labor market specifically.
Obviously, here we're seeing a lot of these reports, especially in these, real brain dead tech and financial services companies, which have, unfortunately laid off a good number of workers, real good high-paying jobs. And, the media reports have been widespread on this. However, as economists looking at the, the aggregate numbers and the economy as a whole, the labor market still remains strong. Even with the tech industry, shedding, upwards of 100 to 150,000 jobs, their employment levels within this industry are still, much higher than they were a year and a half ago. And overall, this is a relatively small number of jobs, in a U.S. economy that added over 500,000 jobs in the month of January alone.
Well, that kind of answers the question of why these job cuts, which have been pretty steep in the tech industry, why they haven't really shown up that much in the actual unemployment numbers. Is that, sounds like you just answered it there, honestly.
Yes, despite, what were those headlines and the layoffs in the tech, financial services, and, those high-profile industries, the labor market, is very strong. Kind of any way you look at it, we're seeing very little labor market slack, which really, on the flip side, is, relatively bad news for policymakers at the Federal Reserve, who are looking and hoping for like job openings and other metrics, besides unemployment to fall, which can alleviate that wage pressure growth that goes into underlying, price pressures and inflationary pressers.
So taking all of this into account, do you think that the Fed is being aggressive enough since we're still seeing such, more positive numbers than we expect?
One thing to really note here is, and I think economists have been harping on this for a long time, is that it takes a long time for interest rate hikes to be fully felt by the economy. A simple look at the historical relationships between the federal funds rate and the employment rate shows that the strongest relationship occurs after you've lagged the unemployment rate for 24 months. So, we're 12 months into this hiking cycle. And granted that some of the most aggressive rate hikes happened in the latter half of last year. So we still have a ways to go before those rates are fully felt on the labor market. That said, sorry, go ahead.
No, go ahead.
I was going to say that, that said that, after the pandemic really, led to this upheaval in the labor market, that there are some reasons to consider that this time might really be different, as we go through this structural reallocation of workers, and firms that struggled to hire workers for a full year and a half are reluctant to lay off workers now. would mean that it might take even longer or not happen at all, like that increase in unemployment that we would expect to see following rate hikes.
That's a great point to add. Thank you so much, Jesse Wheeler, economic analyst, Morning Consult. We appreciate you. Now, coming up, with uncertainty around the Fed's next move, we'll get a few investing strategies to consider. Plus, a few stocks to consider for long and short positions, including Bed Bath & Beyond. Stay right there on the TD
Interesting. Wonder what
Network.
direction they're going on that one.
On close.
Including Bed Bath & Beyond. Would they actually recommend shorting at $1.40? They might say long, actually. Yo! I want to hear what they have to say about that. After that segment, I'll probably cut off the stream and do my video. SPY's finally filling this gap. Long march down today. Before today, I was thinking we'd be a little bit more bullish. Some profit taking coming early on the uncertainty of tomorrow. Long live Turka. Yeah, I'd be very, very intrigued if they say that it's a good short right now. They probably won't say it's a good long or short, just say how awful it is and sketchy. But if it does get a bankruptcy, could be a good value. I can say that. Possible. Literal fan clubs. Good point. Tesla come down with us too? No, it's held up.
And it's time now to welcome in Mr. Schultze. We're talking with George Schultze. He is the founder of Schultze Asset Management. And we're going to talk about first the Fed. Why not, right? Thank you for joining us. But let's start with your thoughts about Powell's testimony, or ahead of his testimony this week. Kevin Hinks tells me it depends on which Jerome Powell we're actually going to get tomorrow.
I think that's right. Yeah. So in January, the Fed raised rates by another 25 basis points, and we're hearing a lot of tough talk coming from his camp. But really, if the Fed was serious about raising rates, they should probably be at 8% or more if they were serious about really shocking the system and stopping inflation. And these little baby steps, they don't really amount to that restrictive monetary policy. And in fact, you're seeing an offset from the opposite side, from fiscal policy, which continues to be very expansionary. There's massive deficit spending, and because of that, we're likely to continue seeing lots of inflation going forward. And right now, because of that, you have pretty much modest GDP growth, record low unemployment, and this expansionary fiscal policy that continues to make investors optimistic.
With all of this competing data, is it time for a real shock to the system? And what does that look like?
Yeah, so, again, if the Fed was really aggressive and interested in, stopping inflation, and the target is 2%, but we're way above that right now, the question is really, why shouldn't we be at zero in terms of inflation? But to really shock the system, you'd have to go way up beyond what most people expect this year, which is 5 to 5.5%. Maybe as high as 8 or even higher above that. There's no reason, really to maintain it at such a low level. So you're really not shocking the system yet with monetary policy. And because of that, here at Schultze Asset Management, we expect that you'll continue to see inflationary trends.
All right. Well, you've got a few long positions in the market right now. Let's start with AMI.
Sure.
Oh, he's already short.
That might be a typo. AMR, which is Alpha Metallurgical Coal.
Oh, he's probably already short on
a pure
BBY.
play met coal producer that operates in the U.S.
I thought she was giving recommendations, but
and it has a great balance sheet. Oh. But even despite that, it trades at just 1.2 times EBITDA, and we think it will benefit from this continuing inflationary trend.
You're absolutely right. It was AMR. I misread that. But you're also looking at Vistra Energy.
Yeah, that one's interesting too. In fact, they had a very interesting announcement this morning. The stock's up 14% today. It's a major utility that has both retail and electric generation, and it also has ESG-friendly distribution and generation that's building up, and that's part of the announcement from this morning. But this company, Vistra, has a huge stock buyback program. Last year, they reduced their stock float outstanding by 20%. And they announced another $1 billion stock repurchase just today.
Wow.
So despite that, trades at about half its multiple of its peers.
That's huge. And I want to ask for a couple more. Bed Bath & Beyond is really on a lot of folks' minds now, especially with just all the activist investor pressure, as well as this company trying to find a way to continue to operate, right? What are you looking at on Bed Bath & Beyond since you're short on it?
Just a couple weeks ago, this one was looking at bankruptcy, and they really pulled the rabbit out of the hat. They raised $225 million through a very dilutive convertible preferred stock offering. However, what people aren't really focused on, perhaps, is that the stock will be diluted by approximately 80% if that convertible and the warrants that were attached to that asset raising are fully exercised. And so the true price per share for that raise was about 76 cents a share versus it's still trading at about $1.45. Now, importantly, for Bed Bath & Beyond, also, its debt that's senior to the stock is trading at about 13 cents on the dollar. And really, this is an old line brick and mortar retailer that has lost the secular change battle. And at its current multiple of about 17 times EBITDA, it's completely overvalued.
Completely overvalued. That's what I've heard a lot of other analysts say as well. And so last time you were here, you were looking at GM. And what are your thoughts on it now? Have they changed?
So GM reported pretty solid earnings over the last couple of weeks. The outlook for automobiles is, of course, challenging, particularly if we face a recession later this year or into 2024.
But the interesting thing with GM is all the new electric vehicles that they're launching. And I think that's an exciting story. Not only do they have electric vehicles, but they also have their Cruise Automotive division, which is fully autonomous automobile driving. And those two drivers of growth for the business
the warranty
should
like
help
$6
offset the risk
something.
of cyclical recession risk for any automaker.
Enough to offset the risk,
30
but
or something
is
like
it enough
that.
to make them a viable competitor for Tesla,
And the,
for
the
instance?
bonds are way up.
I think for sure. GM has spent a lot of money. It has a great balance sheet. It's building plants in the U.S. I would say it's, they're probably the number 2 in terms of, the businesses that will get market share in the near term from EVs, with Tesla having really, the initial market share, but GM having a much longer history, big cash flows to support its growth, and just
Yeah,
outstanding
when
brands.
she said coming up, I thought they were
Last
going
minute, we have
give
also
analysis
looking
on
at cannabis operator Clever
to go long or
Leaves.
short on these stocks. I didn't know she was talking to
long ago. What are your thoughts
an asset
right now?
management group that, of course, is already
Yeah,
short
so
the
this company's
stock.
going through a bit of a transition. They clearly need to grow their top line revenue, and they'll be reporting in just a couple of days. So we'll be watching that closely.
All right. George Schultze, thank you so much for joining, founder of Schultze Asset Management. Now, coming up, Tom White will have a few unusual options trades to dive into for Emerson Electric, Palo Alto Networks, and Snap. That's next.
You're just saying his position. Yeah, it's like, I can't imagine them saying, oh, this is a good short. Even if you have his thesis and you think it's going bankrupt. I mean, looking at this chart, you'd have to say it's too late. Right? I don't know. Seems maybe not. Maybe it's a smart short here. Yeah, it could go bankrupt at some point for sure. But your return is stupid to short it at this price. So yeah, if you were short at $10, $12, then you can push your short thesis, but to open a position here, it's just kind of foolish. Yeah, I mean, this is a nice time to close a short. I'm assuming that guy's short was probably in this weeks ago. You know. I filled that gap and still dropping here. Now it's negative. Negative on the day. GME right at break even. Maybe I might not do a video today. Let's see. I suppose I could. Alright, I'm gonna end the stream here, guys. Thanks so much for your support, for your subscriptions, your likes, your notifications. Thank you, Ace, for your donos. Really appreciate it, man. Very generous, as always. Thank you, guys. Sub up, like up, comment down. Happy money sticks around. When I have a video, should be short and sweet. Put more money into BBY today and GME. Pretty simple. But yeah, we'll recap that and some TA. Thanks, Christopher. Thanks, Jan. Thanks, Jason. Thanks, Obi. Thanks, Pablo. Thanks, Christopher. To the moon. We'll see. BBY might get a little pop before end of day. I feel like 33.30 though. We'll see.
Nice little volume there. Okay, we'll see you guys in the recap video on the Discord, pinned in chat, or on Twitter. Sub up, like up, comment down. Happy money sticks around. Okay. Out. Thanks, Sarah. Thanks, Jason. Thanks, Aid.